Good morning. We welcome you all to our today's seminar on GST and its implication on trade and business with the sector-wise analysis on EPC contract, works contract, real estate, e-commerce. Now, this is the first time we are doing a physical program after 2 years. So once again, we welcome you all to the Bengal Chamber premises. We have with us our distinguished speakers, Mr. T.B. Chatterjee, who is the chairperson of the Indirect Taxes Committee of this Bengal Chamber of Commerce and Industry, and senior partner and mentor, TCN Global and Economic Advisory Services, LLP. And also we have from the department, Shri Kaushik Chakraborty, who is the Joint Commissioner of Revenue from the Directorate of Commercial Taxes, Government of West Bengal. He will deliver a special address on compliance rating in GST. I now request Mr. T.B. Chatterjee to deliver the welcome address and take the session forward.
Thanks, Sorbani. My dear friends, delegates, ladies and gentlemen, we all welcome you in these live workshops, offline workshops, being organized after a gap of 2 years approximately. We lost your associations, direct associations, for a long time. Although from the chamber, we organize workshops, around 4 to 5 workshops in a year, and we continued it in 2021 through online systems. But being a regular professor, I understand the difference between online seminar or workshops or class or offline workshop or class. So we are very happy that at least after a gap of 2 years, we could commence our regular activities. Friends, we basically deal with the taxations. This committee deals with the taxations. And several changes have taken place in India in the last 2 years in the field of custom, foreign trade, GST, FEMA areas. And I feel that the workshops and seminars help a lot to reduce the gap in the knowledge. So in this background, we have organized these workshops or seminar for the whole day, and we'll discuss many important areas which you have probably not heard, but it has already been implemented in our country. Many new things we will come to know. We are not here just to explain what is VAT or what is GSTR 3B, 2B, 1C, 9C, all these things. These are already gone. But now we'll be discussing many other important areas which are untapped in your knowledge. So we have series of discussions today, and this time we have organized discussions on an industry basis, not general. So education industry will be discussed and how they are affected. Hospitality, EPC is a major area of discussions because we are facing lot of issues about the rate, valuation, credit system, return systems. So this time, if you see our areas of discussions, we have done on an industry basis, real estate, and normal in any case will be discussed. And another area which will be discussed by the learned speaker, Mr. Kaushik Chakraborty, and he will give us his views about the rating system, which is still not implemented, and it is going to be implemented. You must have seen in the GST compliances, the department is now going into the detail one by one. They have already started the departmental audit, section 65. They have already initiated proceedings to investigate about the trans credit system. Almost all of our big clients are now handling these issues. And in the GST, there was one provision regarding the rating system. You have hard rating system is there in credit control, in bank finance, debentures issue, share issue, fixed deposit, governance rating, all these rating systems are already there, but mostly in the financial sectors. Now in the GST, the rating system will be introduced based on your compliance on various parameters. So we have, since it is totally controlled and it is totally in the process of formulations by the department, so we had requested to the Honorable CCT to send a suitable person who can deal with the rating discussions. So you will know today how you can keep your rating on the higher side. Higher the rating, lower will be your interactions with the department. This is the new system, and it is going to be implemented very soon. We know rating. The department, in its exposure draft, when GST was implemented, they had explained why they need rating, which are the areas compliances will be looked into, all these areas, but we did not get detail. I think this will be a great help for all the good companies, so that good companies and bad companies are separated. And that is what we need. We also need rating system in income tax, which is unfortunately not there. And as a result, you will find a person is paying 40 lakhs tax and another is earning more than that, but paying 1 lakh tax. This is very much there in our country. There is no rating system. I think rating system is a very good system, but only point to inform you, this rating system will, so far I understand, I will understand more from Kaushik Babu, this will be on your computer system based. That means it will be based on artificial intelligence to a great extent. This is what I personally feel. Because you have a total number of assessees in our country, as on date is 1 crore 25 lakh. 1 crore 25 lakh assessees are there all over India. Now, this cannot be handled manually or by person to person. So you have to be very sure that what rating is given, it is actually based on factual informations. So therefore, I will give you one example. I have one client in Bolpur. He took his registrations 3-4 years back. It's a big construction company. But after 3 months, their number was blocked. Why it was blocked? What for it was blocked? Nobody knows. Even today we do not know. And the client was advised to take another registrations. And he took the registration and he is continuing his business. But the first one, the former license, the former registration number is still blocked today. So if this blocking will certainly be a negative point in respect of the rating. Why it was blocked? Department also doesn't know, and they are unable to open it also. We have to pay certain amount of tax for this period. The client cannot pay the tax because number is missing. They cannot access to the number. So this is a very peculiar problem. This will be there in a country like us, wherein 1 crore 25 lakhs registered assessees are there. There will be some amount of overlapping. But we have to be very careful. And I thank you once again for responding to our request to attend in person. It is our probably first conference or seminar after a gap of 2 years. We thought, let us take an experience. So if our experience is fine, then we can bring many more workshops on important areas. Like today, I will be discussing certain subjects which probably are not known, or you know little bit. You have heard somewhere in the paper, but do not know its real implementation process. With this, I will welcome all of you, and I acknowledge my gratefulness to Mr. Chakraborty for his kind presence here, and I will request him to deliberate his matter before this August House, and let us understand what about the rating system and what department is thinking and what benefits we can expect if we have a AAA rating or AA rating. With this, I request Mr. Chakraborty to deliberate the matter before our members and delegates. Thank you.
Thank you, Honorable Chairperson, Indirect Taxes Committee, the BCCI. And also I express my heartfelt gratitude to BCCI for giving us the opportunity on behalf of the department to represent this issue, which I think probably in the next few years will be playing a very vital role in the tax administration as well as the tax compliances on the part of the registered taxable persons. I also welcome all of you who will be bearing with us with this issue. Now, the thing that I'll be deliberating will be the departmental perspective regarding the compliance rating system in GST. Now, as you all know, this rating system is what we call the first impression that we get regarding someone. While coming to this seminar, we, maybe all of us have got our own impressions of what will be happening in the next half an hour, what will be the department's stance that will be published in front of us. So we all create our own impression, we all create our own personal rating. Maybe after this lecture, this ratings will worsen, maybe it will be having any positive outcome. But as Mr. Chatterjee already said regarding the perspectives of GST compliance rating system, the very first principle of GST was based on self-assessed discharging liability of the tax. Now, this self-assessment as well as discharging the liability is also based on a certain parameter of timely discharging the liability. Here, two things play a vital part in this GST compliance rating system. Now, let me be very clear that right now, this compliance rating system is available in the back-end process. That is, a tax administrator or a tax official can view a certain risk score or a compliance rating score in his dashboard regarding a certain RTP. But often this rating system is not known to the person who I am rating with. But this rating system creates the first impression regarding the profile of that RTP before the tax official. And since the business goes on, but the persons handling the business in flesh and blood, they change. In the same way, the tax administration chair, that remains the same, but the persons change. Now, when a new officer comes to play a role of a certain jurisdiction authority, he wants to get the first impression of the profile of the performance of the RTPs, and that rating system that the system provides, that play a vital role, a very important role. But at the same time, let me be very, very clear that personally all of us from our department do not take that rating system to be the sole criteria of judging or having the first impression regarding the RTP. There are other aspects which are often not reflected in data, in the data system in very specific terms. Now, what we need to assess, what we need to find is that not only the amount of tax that an RTP discharges, but also the time within which that liability is discharged with. It often happens that someone is paying 5 lakh of tax, but within a very short time, within the due time. But often a person who pays a very good amount of tax, but he lingers it, he takes a huge amount of time, he makes late payment of taxes, and that often is taken as a non-compliance by the system. As Mr. Chatterjee has already said, that there is an artificial intelligence system that plays a part in calculating this compliance rating system. Now, the very first positive thing that we get from the compliance rating system, that a person who is having a higher compliance rating will be always having a lesser chance of getting interacted personally with the department, because always we wanted to be a paperless, interactionless GST system where the business will be operated from the business place and it will be operated mainly through the system by a principle of self-compliance. Now, before going to the other details, let me just represent two aspects of compliance as per the GST laws, because from those provisions of the law, the basic thing will come out. As per the statutory provisions of Section 149 of the CGST Act as well as the SGST Acts, now it's been said that every registered person may be assigned a goods and services tax compliance rating score by the government based on his record of compliance with the provisions of this Act. At the same time, I would like to point out that, as Mr. Chatterjee has already informed, that the department currently is going through a process of GST audit under Section 65. Now, what is GST audit? GST audit, as per the Act and as per the definition as given in the Act, is not only the examination of books and accounts and the correctness of the returns as well as the tax compliances, but also is a process of assessment of other compliances also. As per the definition of audit, it means that this is a process to verify the correctness of turnover declared, taxes paid, refund claimed, and input tax credit availed. That means these all things are self-assessed data that have been fed from the end of the RTP. But as well as this audit is a process to assess his compliance with the provisions of the GST Acts or the rules made thereunder. So there are other issues of compliances. Compliances regarding invoicing, compliances regarding maintenance of books of accounts, compliances regarding following of the time of supply, place of supply principles, etc., value of supply principles, etc. There are other issues of e-waybill, etc. Now, this data that is used for giving a compliance rating score to an RTP is based on two aspects. One, from the data that is generated out of the feedback given from the RTP's end. That means the basic return data. How much is the turnover, how much it's increasing, how much tax is being discharged, how timely it's being discharged. At the same time, there are other issues which are detected by other enforcement agencies, maybe the auditing agencies, and through their observations, often these data add back to that feedback module. And with a collective feedback of those information that is generated from your end at the time of filing the returns, as well as the other feedback that's given by the tax administrators through other surveillance works or monitoring works, I'll be rather much more precise. So these things add to the compliance rating system, and that is displayed in the dashboard of a tax officer regarding the profile of that particular RTP. And often we get specific reports which not only, this is just an internal matter maybe, we often get reports generated from the system, from our backend, which shows the amount of smileys that are given against a particular RTP. Maybe RTP which shows much more compliance, they get 3 to 4 smileys. So the very first impression that an officer gets from those reports is that, okay, this RTP is a perfect person regarding the compliance issue. So there may be certain issues which I need not be very hard in looking into or being surveillant. So as I mentioned that regarding, since the audit process is going on, while selection of the RTPs that have been selected for, right now we are going through the process of audit for the period of 2017-18. So while selecting those RTPs who are now being audited by the Directorate of Commercial Taxes, we fix certain parameters. And those parameters actually play a very vital role regarding the compliance rating. These parameters are what? Very simply, what is your return filing compliance? Are you a habitual late filer, or maybe you have defaulted in filing a return in time, in the scheduled time, maybe once or twice. It may happen. Often we get late in our day-to-day works, but am I a habitual defaulter? Am I a habitual late filer, or is it's just once in occasion? So these parameters are being set, and accordingly risk scores are given, and accordingly we try to find that how much score they have got. For example, just let me give an example. Maybe late filing is a parameter. We are trying to give a score of 1 to 10. Now, a person who files return beyond the scheduled time, maybe 75% times more. That is 9 months out of 12 months that he is supposed to file the returns. Maybe the system will give him a score of 8 out of 10. A person who is getting a score of 0 is a person who files the return every month within the due date. Now here scoring the marks of 0 is not something which is very bad. It's rather particularly very good, because when in this parameter you get a 0, that means you are the best. So the system takes this into cognizance. At the same time, as maybe all of us have faced the issue of reconciling the difference between ITC auto-populated in GSTR 2A and the ITC that we have enjoyed or claimed in GSTR 3B. That is always a living issue. Now, what the system wants to identify is what is the amount of this unreconciled ITC that is populated every month. And so if now, that unreconciled amount is always not the sole criteria. The ultimate result is how efficiently that is being reconciled, because once it's reconciled, the feedback is given in the feedback module by the monitoring authority. Now, if it happens that a person is having quite lump sum amount of unreconciled ITC for every month, and the feedback regarding the reconciliation is not being given in the feedback module, the artificial intelligence thinks that maybe the RTP is not complying with the reconciliation issue. Because it happens, often it happens that the RTP takes 3 or 4 months to reconcile one particular month. So that means a particular month issue is taking 3 or 4 periods to get reconciled, to get settled down. So this is also a parameter. For this, maybe the person, that particular RTP will get a higher score. And in this case, the getting a higher score will be giving a negative feedback. So in this way, there are two things. One is a compliance rating, and through compliance rating, another thing generates, that's a risk score. And that risk score is displayed in the dashboard of an officer while we process the refund applications. So in the same way, while, but let me be very clear that not in all applications of refund this risk score is generated. For example, in a case of refund coming out of excess cash balance in the cash ledger, there is practically no risk at all, because you are getting a TDS credit, maybe you are getting a TCS credit that is increasing your cash balance, and you are legitimately asking for the refund of that balance. So practically there is no risk. But there are other aspects where these risk scores and the compliance ratings are displayed, and that gives the first impression as a negative. The first impression that maybe if I get, if I try to find the profile of a particular RTP and I find that the risk score is maybe 8.5 and that is being displayed in red, bold red, I'll be cautious. And the same way, if you go to find the compliance of anyone whom you, that facility is not being made available right now, but if it happens in such a way that you are trying to make a business deal with someone whom you don't know, and you want to just identify, assess the compliance pattern of that particular RTP, and if you find that that is being displayed in red as 8.5, you'll be much more cautious. And that's quite natural. And the same thing happens in this GST compliance system. So just what we try to, the intention of this GST compliance rating system was that this, of course, from the tax administrator's point of view, is a mechanism of tax surveillance. We will always try to make it much more efficient. But at the same time, this also intends to help the business fraternity to get a very clear picture of the performances of the other business persons whom we are dealing with. Because this issue of ITC mismatch in 3B vis-a-vis the 2A is a burning issue. And all of us get bogged down some way or the other, in particularly every month, in reconciling this difference. So a person who is not filing his 1 or 3B, etc., who is in my other end, that will create a problem in my part in enjoying the ITC. So this compliance rating system was basically dreamt of, for easing out all these issues. Now, the other aspects regarding this compliance audit, as we already mentioned, that since compliance is a factor for selection of RTPs for audit, so that will also play a vital role. A person with a higher compliance will have lesser chance to get scrutinized or audited by the department, because all we want that someone who is complying with the tax provisions, someone who is discharging the tax liabilities in a much more better way, need not be put into the scanner in so many times. So basically, this efficiency of transactions, timely input tax credit availment, these things were the primary concepts that led to the development of the rating system or the risk score analysis. That now I'll try to just discuss into a little much more detail regarding the parameters that were subject to which GST compliance's rating are determined by the system. Of course, as I already said, and I will also repeat it once again, that basically the artificial intelligence from the back-end system of the GSTN, they make all these scores, but at the same time, that is based on two specific data feedback. One from the RTP's first point of compliance, that is the return compliance, because his performance is primarily captured in the return. And how much data is being fed, how much data is remaining as mismatch, how much data is remaining as unreconciled, and how the data is being fed within what time. That are the basic criteria of this data feeding system. And there are other aspects where his other compliance methods, for example, e-waybill utilization, this tran credit mismatch, other mismatches regarding which the reconciliation feedbacks are given by the officers in the feedback module. These also play a vital part. And then maybe in future, the results of audit, that will also maybe playing a vital part. So the very first parameter that plays a part in this risk scoring system or the compliance rating system is the payment of GST within due date. Of course, the law provides of paying taxes beyond due date with interest. Of course, it's being paid with interest. But the system wants to find that without paying interest, how much tax is being paid by whom within due time. Because the time is fixed by the law. And so how much compliance is being is made by the RTP from his end in the first instance. And if this late payment is happening, whether it's happening in regular basis or it's once in a blue moon. If it's once in a blue moon, then it's something else. If it's not, then what happens? These things are taken into you. At the same time, it often happens, let me just share with you, I have faced these kind of problems. We often find that the GSTR 1 is submitted in due date, but the 3B is not. So that means The outward supply details are already placed in the system. ITC is being flowed in two-way, etc., etc. Someone in the other end is enjoying the ITC, but I, from my end, I am not filing my tax liability. I am not discharging my tax liability. I am just lingering it with the issue of क्या करें सर ये accounts का problem है, etc., etc. So the system takes this very seriously. So not only filing one, but at the same time, I've also found this, that the RTP has filed GSTR 3B, he has discharged his tax liability, but he's not discharging his tax GSTR 1. Now when I call him, or rather mail him, the only answer that he gives me, sir, the maximum amount of transaction I have is B2C, I don't have any problem regarding passing of the ITC. So sir, GSTR 1 कर देंगे sir, tax तो दे दिया. But that is also not quite acceptable in the system, because the system wants to match the 1 and the 3B. How much outward supply you have made and how much tax you are discharging, whether there is any mismatch of the turnover disclosed in 1 and 3B or not. That is also a criteria. So filing 1 and 3B both in due time, filing the GSTR 9 in due time, paying the taxes in due time, that is also a very major parameter, as well as the amount of turnover that you disclose, the amount of mismatch that you have got, the amount of tax that you pay, the amount of tax that you pay in cash, the amount of tax that you set off with your ITC. These are all legal provisions. But the system wants to identify that how much efficiently, how much timely you are discharging those compliances. That is the sole criteria. And also I said that there are other criteria of reconciliation. There may be mismatches. This matches is a common thing. It will happen. In the most idealistic situation, in the maybe hypothetical situation, it may happen that there is no mismatch in the 2A or 3B, or there is a very minimal mismatch. These things will happen. But what we want is a proper reconciliation within due time, so that the system, the database can be upgraded in a much more lesser time. Now, there are other issues that have been identified while making those surveillances or examinations, that the law provides with some invoicing patterns, with invoicing rules, but there had been certain deviations from the invoicing rules. These also are taken into consideration while these feedback modules. There are other aspects of maintenance of books of accounts as given in section 35 of the GST Acts. Often we find that things have not been maintained in proper manner. So that may also give a feedback to the module, and the ideal situation will happen when you will also be having the facility of viewing those compliance rating and etc. Now there are other aspects of time on supply and place of supply provisions, of course. Now let me just go through, I just got a document yesterday from the system regarding certain specific parameters that we use for calculating this compliance rating system. And for example, the very first compliance rating parameter that I found was the return filing compliance regarding GSTR 3B. Regarding consistency, the system actually tries to identify the RTPs into separate categories. For example, the RTPs who file return in due date, of course, they get a score of 0. Their risk is 0. Now, someone who files a return beyond 5 days, maybe someone who files a return beyond 10 days, someone who files a return beyond 15 days, maybe beyond 1 month, or maybe 3 months. These are very specific criteria that the system identifies, and there are RTPs who file return beyond 3 months. We all know that. In the same way, the system identifies the consistency of the return filing in aspect of GSTR 1. In the same way, and also the system identifies that between the R1 and between the 3B, how much time is being spent. Maybe the R1 is generated, is uploaded in the last date. R3B is also generated in the last date. But is it being happening, as I said in my case, that they always file the 3B at first and then the R1 first in the later month. And often it happens that they file all the R1s at one go. They are defaulter for 3 or 4 months, and then one fine morning I open the dashboard and find that all things have been cleared. What a good thing. And then they again stagger for the next 3 months. It's a regular thing that they happen. So is it happening in such a way? What is the cycle of this compliance? At the same time, what is the tax difference and what is the turnover difference between GSTR1 and GSTR3B? What is the amount of reconciliation that we need to make, whether we need to make at all or not? What is the credit difference between GSTR2A and the GSTR3B on every return basis? And there, what we find, the system identifies certain parameters. Number one, whether there is a difference. If there is a difference, how much is the difference? Whether the difference is more than 10% or 20% or 30%. These are the various criteria according to which this rating system changes. Then there is one more thing. There is also a very big issue that maybe all of you, maybe some of your fellow business persons or persons from the industry have faced, that we purchase in good faith from someone, and then one fine morning we get a notice that this person from whom we made the purchase or made the inward supply is an ab initio cancelled RTP. This also often happens, that we find that there has been lapses or due to any other issues, the person from whom I took the supply, that registration has been cancelled, and maybe my purchase, a considerable amount of purchase, is falling into a period where that RC was cancelled. So it automatically affects my ITC on a particular date where maybe I have finalized all my accounts, maybe it was of last year. So this also plays a part in the artificial intelligence system of how much inward supply that you are taking from these kind of fictitious RTPs. Now you may say that what is the way out to identify, how am I going to identify whether this person is non-compliant or not? For that, you need to have that system in your dashboard, and the system is always working on it. Now there are other compliance issues of e-waybill, of course, and in these cases we try to match that. Often we find, the system finds that the particular RTP has a huge amount of outward waybill utilization, but accordingly the turnover in his GSTR 3B or R1 is not getting that increase, not increasing to that extent. Maybe he is having a huge amount of waybill utilization outward. At the same time, maybe he is reporting a huge amount of inward supply as well as ITC, but the inwards waybill utilizations are not being reflected in the system accordingly. So the system gives that kind of feedback to the dashboard, and accordingly maybe the surveillances are made. So these are the basic criterias of GST compliance rating system, which gives a very first impression to the department. It's expected always that this first impression will always be made available to you for the ease of your business. So what we intended regarding this formulation of compliance rating, as I've already mentioned, I'm not going to take too much time because there are other much more important issues which need to be discussed. What I tried to discuss today, I just tried to give a very brief overview regarding this, and this is a very subjective thing. Once you get this kind of compliance rating or risk scores available in your dashboard, that things will be much more easier. So the benefit of compliance rating, as the system tried to formulate, was that it's a two-way benefit. One, from the part of the government, from the part of the tax officials, of course, and one, of course, the other that is much more important, to the business fraternity. So this will be having the effect on the buyer, of course, because the buyers will look for sellers who will be having a much more higher rating, which will decrease the possibility, will negate the possibility of any kind of future hassle, any kind of future headaches regarding this reconciliation, etc., etc. As well as it will also affect on the sellers, because the sellers with a higher rating will attract more and more customers, and it will bring in a healthy competition in the industry, of course. And to the government, of course, as I already made it very clear, that an RTP having a better compliance rating will be having a lesser chance to be under continuous scanner of the system. Someone who gives a negative impression in the first instance, for example, regarding the ITC mismatch. Now, if someone is claiming a refund on the issue of ITC, and if that person is having a high risk score regarding the compliance rating in the ITC mismatch, of course, the officer will be much more tempted to be more than alert in looking into the intricate details of those transactions rather than other things. So it actually makes him a little bit biased. Okay. And being biased is not a good thing, of course. So this government also, the tax officials always want to have a very easy platform for the business, because the very principle of GST was to have a hassle-free, paper-free, interaction-free tax compliance, tax administrative system, which will be based fully on the self-assessed compliance of the RTPs. And for that, the compliance rating system was generated, and this is the basic thing that I wanted to share with you. So practically, this is all I have right now regarding regarding the tax compliance system. If you have any query regarding this, you are always free to share with me. There may be issues which I'll not be able to address due to issues of principle of application. But if I can, I'll be trying to answer your queries, or else I'll be expressing my thanks and will be concluding my presentation right now.
Anybody has got any question on the rating system?
Hi, sure.
Sorry?
Okay. I was hearing in that seminar that while filing, first we file GST 1, then we file GST 3B. Now in the recent Finance Act, the Finance Bill which is to be passed, it has been said that we can't file 3B if we haven't filed GST 1.
Yeah.
So this is, I think,
yeah,
I
but
just
actually,
want to
the example that I gave was practically that RTP is always a defaulter by 3 or 4 months. So what you are quoting is a very recent development, but the thing that he has already done, now the system has already made those validations, and so he is not in a position to revert back the problems that he has already created, because the system is allowing him to file 3B only after filing the 1. But he has already filed the 3B for the previous months. So now so that means now the tax officials will be much more bogged down or spending time in those issues of contacting the GSTN system, of the system administrators, that someone has created a problem and now there is a validation. He was supposed to be compliant enough to go in the sequence of 1 and 3B, but he has not. So now let him file that 1 because he has already filed the 3B. So it's already creating a pandemonium for that RTP also and for the tax officials also. And so that is creating maybe irritation. So now things will, in that particular manner will not happen, but things like that has happened previously. I was just trying to give an example because things has happened in that way, or maybe vice versa previously. But to avoid that,
Yeah, my specific question is that if suppose we are not filing GST 1 but we are filing GST 3B. Now in this new introduction, suppose we have while filing GST 3B, we got stuck because we haven't filed GST 1. Now the question is that means if it is it vice versa also? Means how to get down both the returns on time? Means is there
see, the
any
basic, the concept of this 1 and 3B was that first you assess how much outward supply you have made.
Yes.
So automatically what implies that you are going to file your GSTR 1 in the first instance. Because first you are going to fix your, maybe in terms of accounts, sales ledger. You fix your sales ledger, you identify how much sales you have made. I'm not going to the technical details of supply, etc. I'm just using the word sales. So first you identify how much outward supply you have made, you file the GST 1, and then you get enough time to calculate how much tax you are going to pay, because now you have got the other things of ITC, because this ITC will be set off by using the ITC that have flown into your GSTR 1 through the GSTR 1s that have been filed by those suppliers from whom you have taken the inward supply. So automatically you are getting 5 to 7 days much more time to file your GST 3B. So that was the concept, and that is the concept, initial concept that was conceived, and that concept is being stick to. That will be the sequence, that you first fix your 1 and then you fix your 3B, and if it's required, then there is a possibility of amendment in future returns. You can always do it. But I don't think that first 3B and then 1 will be a much more prudent thing.
Not only that, if you don't file GSTR 1, you are basically not allowing your customers to take the credit. So this is what you have to understand first. Forget about the logic, whether it can be filed. First of all, if you do not file GSTR 1, your customers are unable to take the credit. And as per new law, there is no provisional credit or anything there. So please remind that logic and then law. Sir, I have 2 questions.
Yeah.
Thank you, sir.
Please ask your question first. Please.
Sir, I wanted to ask you, like, suppose if an entity have more than one registration, maybe 10 or 12 or 15, so the rating that an officer can see in his dashboard, will it be only for the West Bengal or the entire ones?
No, right now, what we can see that a jurisdictional officer can view the rating system of those persons who are under his jurisdiction as a whole, that means West Bengal. Now, if the system allows me to view, there are certain roles given by the system to a particular officer. For example, if the system gives me the role of viewing only those RTPs which are under a particular jurisdiction, maybe my jurisdiction, maybe that number is 200. Just take it an example. So I'll be able to view those 200. If the system gives me a role that I can view a broader aspect of maybe 1000 under that geographical division, I'll be able to view 1000. And if the system gives me a role of the entire state, I'll be able to view the state. But the system administrators for a particular state, they are able to view things in a holistic manner.
No, I wanted to mean, like, suppose that you are viewing my credit score for West Bengal.
Yeah.
If my credit score for West Bengal is suppose not very good, not very bad, it's neutral. But I am following timeline in other states. So will that other states also impact my West Bengal credit overall, or only West Bengal will impact?
No, your performance, as I said, that this credit score is primarily based on the return data. And since this return data is linked with the GST of this particular state, so what you perform against that GST will be affected in the credit score of that particular.
So it is not PAN based, it is only GSTN based. Secondly, sir, one more thing, like if suppose department have issued a notice or an audit upon my registration and have asked me a lot of documents. Now, it can happen that I take more time, like I ask for delay extension. Will this ask of extension within time also affect the score, or it will not affect the score?
See, what I said that this compliance rating system is based on artificial intelligence. It's true, but also there are things which are not that artificial. So you are supposed to get time as per the law. Now this is, still now there is no such feedback regarding how much time that you are taking, but at the same time, if it happens that you are not producing any document at all and you are praying for time and time and time and time, forget about the compliance rating system. Now you think from your, forget about GST, forget about everything. Let me find that I am asking for a book from my friend. I'm asking for from my friend to return the book which I gave to him. And he said, "Aaj nahi kal nahi parso nahi uske baad." So it will automatically, you will get irritated. But if you find that he is in dire stress with that book and he's studying, and now he said that I am got my exam tomorrow, and so I'll be returning it to you after one week. Will you get that irritated? So it's always not only based on artificial intelligence, but also on the prudence of the officer also. So if it's on legitimate grounds, no one is there to create problems. But if it happens that it's killing of a time, that of course, even if there is no credit system, compliance rating system at all, even if there is nothing as such, but it creates a bad impression. No?
That means the intention is also...
Of course.
So the last
And
query.
that's why I said that whether the person who is defaulting is a habitual defaulter or a one-time defaulter, because this is a dynamic document. Let me be very clear. A person who files his return in time every month, now suddenly in a particular month he got late. So it will affect his score, because for that month that score will deviate. But at the same time, whether the officer will be much more looking into that deviation, or in the past performance that he has always been a good performer, this is just once. Whether this is a one-time default or not.
Any other question?
Sir, sorry, last query.
I
Sir.
have one
Several
question.
Please allow others also.
Sir, I have one question. If my vendor is not filing the GST at 3B or his RC got cancelled, then there is no default on my side. So why is it to reverse the ITC? Because at the time of the transaction, this is totally based on the RC he provides me. So yeah, sir, that's my question.
So this, see, this is an issue which was live at the time of the VAT regime as well as in the GST regime, because the main problem is, I will not use the word problem, regarding the statutory provisions of the ITC, it always happens that someone, you will get the credit of the tax only after the tax is paid. That is the basic principle of getting the credit. So there had been issues regarding this. I think that today, since our discussion is based only on compliance rating, if I go into the intricate details of this issue, that will be taking a much more time, since we have got other
I will
lectures
take
to
that
happen.
issue, your issue. There was a case decision yesterday we circulated to our clients by the Rajasthan High Court, and I will let you know what is the opinion of the Rajasthan High Court on this particular issue. But it is not with regard to the GST, because matter is still at a very nascent stage in the appellate process. So far GST is concerned, this matter with regard to VAT. So it has been reiterated, not by the only Rajasthan High Court. There are 4 or 5 high courts have dealt with this matter, and I will explain you when my term comes.
Thank you, sir.
Sir, I just want to ask one question. I'll just take reference of his question and saying that, okay, my vendor has failed to submit 3B1, all these things, no. But it is a genuine purchase, there is nothing, and I have paid the money. Whether that will affect my rating or not. So far my rating is concerned, whether it is going to impact my rating system. My vendor has failed to pay, okay, I have paid the money.
Yeah.
I have reversed it with interest as per new provisions. So whether vendor's ineligibility to make the payment will impact my rating or not. This is my question, sir.
Sir, actually you gave the answer from in the question itself, because if your vendor has failed to pay the tax and you have reversed the credit, that means you are making a perfect compliance of the law. You are reversing the credit, that means you have accepted that you are not supposed to enjoy that credit, and so you are the perfect person who is making a compliance that will affect your credit in a positive way, because you are complying with the law. So it will not only not at all adversely affect, it will rather create a much more better impression regarding your profile.
Hello, sir.
Yeah, sure.
Vendor is not paid. If vendor is not paid, then ITC should be reversed. Okay, I have reversed my ITC. So I have done my duty. This is the law. Now my question is, what is the department duty? After reversing my duty, whether are you going to catch that vendor? So you are giving the responsibility to me to reverse.
The matter,
So are you going to catch that vendor because he has failed the tax?
I am taking
Proper
the-
tax he has not given to the government. So I am punished.
I am taking
After
the-
paying that amount to that vendor, I am punished.
Yes,
You
yes.
have given me punish. But what about that vendor?
I am
It's a
taking-
very-
I
we
am
are doing a free trade, and the vendor, nobody going to that vendor, that party. It's a very funny things we are doing as a trade. Huh? That's why I am reverse. I reverse the GST. Na?
It is not appearing in 2B.
That's it.
Not only that, I'll tell you the latest law which has come in the budget, when I'll deliberate, all these matters will be discussed, and I would like to tell you.
Highlighted this issue.
I
I am
would like
doing
to-
a business.
I
I'm a
know that.
citizen. I am paying tax. Everything
is
I
a-
am doing.
this is
In
a-
spite of that, I have been punished. But who is doing the wrongful? He has not been punished
No, this has been
by the
done.
society. By the society.
This has been
By the lawmaker.
There is an order.
See.
There is an order of the recent High Court matter, when High Court has clarified the things very clearly. Recent. I think it is a matter. सुनो ना, जो बात बोलता है वो सुनता नहीं है. I am giving you a relief. The High Court has, it is not one High Court, 3-4 High Courts. Every day I go through the all case decisions which is coming immediately, within 15 minutes or 60 minutes. About 15 days back, the case decision is Mumbai High Court. This is the same case. They had the party had gone to for a writ petition, asking same thing, sir, how I am responsible. Department is asking me to pay the money. It's a quite huge amount. Then High Court gave it directions to the department. Number 1, you cannot come to the buyer without making all the efforts to realize the money. The court directed the department that please show me what actions you have so far taken or initiated to understand the status of the vendor. Have you done your homework? Without doing the homework, I am just taking clue from your point, you are not supposed to come to the buyer and ask him to reverse the credit. It is your job, you must do that exercise. High Court did not say whether these provisions of not giving credit is right, wrong, because it is already an act passed by the Parliament. And Parliament is the highest law-making authority. So High Court did not give any opinion about the correctness of these provisions, but they said the department, before coming to the buyer, has to make all efforts, like in a bank. If there is a non-payment of interest for a period of 3 quarters, it will be considered as a NPA. Then bank's job is to negotiate, and then once there are 3 periods, then they have to refer the matter to NCLT. Then NCLT will take the process. Without doing this type of initiative, going to the party, visiting to the party, whether it is a fake or not, if that fake, then on what basis you have issued the GSTN, how bank accounts were opened, and you allowed the company to continue for so many periods. If you do not do that, and simply come to the buyer that you now pay and reverse it, that is not the way, and they rejected the revenues department. Sir, this is for your information, I can send it to you, the 2-3 case laws. So this matter is under the active considerations of the High Court.
Sir, one last question.
Sir, I have a question.
Okay. Myself, Showman, representing Larsen and Toubro. One of my vendor has deposited the GST in other state. For West Bengal, he is doing a business. He has deposited GST invertibly in Rajasthan state, and that is more than 20 lakhs. Okay. Now, as per our knowledge, we have reversed the ITC, but vendor is chasing us to, you can take it, you can take the ITC. What is the procedure to get the return? Means, did he approach the Rajasthan GST, or they will
What is the question? Can you tell me, just so that I can also join with sir?
Okay. Actually, my vendor has deposited GST in Rajasthan by mistake. He has deposited in L&T Rajasthan GST number. Okay. But he is supposed to deposit the GST in West Bengal state. Now we have reversed the ITC, and we have reversed the entire ITC of around 17 or 18 lakhs. Now he is asking that you can very well take the ITC because we have already deposited in Rajasthan. So in this particular circumstances, we do not know how to deal with that. So can you tell anything about this?
Question. I have understood your question.
Yes.
Sir,
I have understood your question. The money which was supposed to be deposited at X center, it has been deposited in Y center.
Right.
Now you want to reverse it wherever it was taken credit, but where the money has been deposited, you want to take it. So that it is a reversal,
Yes.
and best utilizations of the money. Sir, no, I have understood the question. Once sir gives the answer, then probably we can.
আপনি বলুন না, কোনো অসুবিধা নেই।
You see, it is not where the money was paid, Calcutta.
Calcutta, right.
And you want to take the credit in Calcutta.
Right.
Calcutta is controlled by separate jurisdictions. Calcutta's GST number is separate. In the GST law, every GSTA needs to be considered as a principal. That means if a company has 5 different numbers, 5 principles are to be considered. It's not that L&T as a whole. Whenever you take credit in Kolkata, then the jurisdictional officers from Kolkata, to that extent they will get the credit. Okay? But that money was supposed to be deposited to Rajasthan, so Rajasthan is suffering. So in that case, Kolkata will be very happy to take the credit, but Rajasthan will lose the money, but you have already reverted it. Now, in the case, if you have to take the credit, then what is the credit provisions? You can take the credit provided the goods have been received, it is supported by an invoice, the money has been paid, All these provisions are there under section 16 of the GST law. But here credit, you are taking credit in Kolkata, which was not supposed to be. So therefore, according to me, it is up to departments, because so far we are concerned, they are not so much affected. But department may not allow it. So I think in this case, you have to take the help of adjudications. If you want to, you have to inform to the department that this is what I mistake. Please allow me to take the credit. Without informing to the Kolkata and Rajasthan, taking credit is not the right way. If you find, I am telling you, the best way you can handle it. It happens in many cases, in my many complaints. We inform him that I am taking credit and it is a revenue neutral. One area I have reversed, another area I am taking credit. So as a whole, there is no monetary issues I have rebutted, so therefore I am suffered. If the department feels no, they can allow it, since it is a revenue neutral, fine. If the department says no, will not allow it, this was supposed to be paid or something like that, then the matter. But logically there is nothing wrong in that. You can suppose the money which you have deposited in Kolkata from Rajasthan, you can always make payment of Kolkata dues from my Rajasthan bank account, because L&T is a one company. In the GST law, there is no provisions that Calcutta payments are only to be made from Calcutta banks.
Right.
It is totally this thing. So I do not find you have done anything wrong. Only thing is that you please inform to the, sir, I hope you have understood. It is a cash payment. Cash payment can be done from America also. That doesn't mean I will not give the credit because money is coming from Calcutta. So it is a cash payment. It is not ITC. It is not goods which you have received in Rajasthan and taking credit in Kolkata. Yes, that time department suffers, although it is a revenue neutral, because Calcutta is suffering and at the cost of Rajasthan. So here you are made the payment. Just simply write a letter, this money has been paid from Calcutta in PLA, that means in cash register. I am still in the old this thing, PLA, RG1 and all this. Still it will continue for some more time. So therefore, please go on taking credit without having any single problem. Keep the department informed. Sorry? He has reversed the manner. So far I have understood, he has reversed the debit and he's... No, not IT, he has paid the money by cash, no? That is what I have understood.
Being paid to the Rajasthan.
Yes.
I believe.
By cash. Just tell me. That is the most important thing. If you pay the cash, you can always pay cash from Rajasthan to Calcutta.
No, sir. If it is a cash or ITC, whatever may be, such tax has to be collected by the
No, from ITC, then it is a problem. I have asked this question. You are supposed to pay the cash.
Suppose assuming cash, then how it, because when
He has
cash,
reversed means he has to pay this balance amount to Rajasthan.
no, that's a question. What I understood from him, question is he is a purchaser, sir. That's why he has reversed the ITC credit.
No, then the...
He is a purchaser. That's why he has reversed the credit.
Sir, can you tell me what is your... Sorry?
Actually, he has discharged his liability through cash or credit, maybe whatever. So his concern is, can he take credit on Rajasthan, if where his supplier
No,
paid his...
he has discharged, no?
Yes, actually his supplier. and
Acha.
his supplier paid.
Ah. Okay. So that has to be reversed in any case. The question. Now, if the vendors makes the payment, subsequently, then he will take the credit. Only in the Rajasthan only. Because material has been received there only. So, but let us understand the question first and then.
Yeah, he has raised the invoice in West Bengal. He has supplied material to West Bengal. We have taken the ITC credit, but vendor has wrongly deposited in our GSTN number, which is marked to Rajasthan.
Oh, acha. So your Rajasthan has got the credit.
But in Rajasthan, in our books,
He
there
has
is
shown in his GSTR 1.
one
Instead of West Bengal, he has shown in.
Rajasthan,
ये तो पूरा
and
case है भाई.
and we cannot able to take the credit in Rajasthan because in our books there is no sales in Rajasthan.
No,
so
no,
we
you cannot take the credit in
Yes,
Rajasthan.
we cannot take the
Because
credit.
you have not received the material.
Yes.
You have received the material
In West Bengal.
Calcutta. Your invoices are also in the name of Calcutta.
Calcutta.
So in that case, you cannot take the credit.
Yes.
It is a very easy question.
So no.
We have.
No, it is a very easy question that I know. But in vendor, if vendor is asking,
You
then
raise a
what will be
debit
the
note.
That is okay. But in that particular money, how will vendor will take the return
Has to
back?
go to the department and ask for that. That is a separate issue. Exactly. Because he is not getting the credit. Oh, his question is that how the vendor can
Yes,
get
yes.
back. That
Is there any provisions or
I think
anything this type of
there is no
happening?
Is it a good money? Is it a good money? It's a very good money. Is it a good amount of money?
Yes.
Then he has to go for litigations. Department will not allow you, and 99% cases you will get the favorable judgment from the High Court. 99% cases.
That
So
is
instead
basically
of
from-
showing to Calcutta, they have wrongly shown it at Rajasthan. But
Wrong
don't
GST
take
number.
credit in Rajasthan.
No, we can't take, na, because our
Take
books
the
of
credit
accounts is
because
not
material has been issued, they have wrongly. So you ask department, vendor to write to the department stating this has happened. This can always happen to everybody, okay? And please allow me to show it in West Bengal instead of Rajasthan. Please allow me to rectify GSTR 1. But GSTR 1 can be rectified
but
up
time
to
has
30th November.
time. This is case
Time
of
has already
1920.
gone.
FY
So in that
1920.
case, you have to go, it's a fit case, to go to the department expecting that 100% department will say no, because you want to have this negative order also, and go to the High Court, challenge it through by way of a writ. 99 nahi hai, 100% cases court will allow you. Okay?
Okay.
There is no problem. Any other question? Sir is there. Sir has got several.
Sir, I have a question, sir.
But, oh, Saurabh.
Yes, sir.
हाँ,
Good
बोलो.
morning.
Good morning.
Sir, I have a question.
Last question. We are passing time. Lot of important things we are losing. Bolo.
Actually, we are filing we are filing GST 9C every year, once filing the GST 9, and department has also started for GSTR. So, what is the extra curriculum activity, or what needs to be reviewed further? Department will start the audit, because at the time of filing 9C, we have reconciled our sales ledger with our P&L, our asset liability disclosed, and also cash flow. So, what's further point needs to be reviewed at the time of department will come to revisit for GST audit?
You are asking this question to me?
Yes, sir. So this is open forum, I can ask you, sir, or you.
Why you are worried? We are there.
But because, sir, as an SSC, we are facing very, mane,
Three
very trouble.
areas you have to take. My session has already started then, please. And three, before any, once you get 65 notice, you have to take care of 3-4 areas. Okay? And I am the devil's advocate. That means I am from the department. Okay? You have to judge in that manner. So what I will see, 9C is there, reconciliation is there. So job is done in respect of the turnover. That is the most important. My payment comes from turnover, output taxes. Once I am convinced about that, then I will see, go with the ITC. And what is the departmental view, whether proper ITC has been carried, whether we'll go with the block credits. Nowadays, you must have seen in the budget, they have come out with 5-6 different block credits. Mind that under GST 2B, which you will get it, now it will be divided into 2 columns. One is normal credit, another credit is which you are not allowed. So therefore, so these are very, very important areas, okay? Then RCM part, you have to check it. And another important area in the presence of the department, I am telling you, the delivery challan. Delivery challan is very, very important. That is the area where there could be a leakage of revenue. Delivery challan means the goods which you are transferring but subject to payment of tax but not payable because of certain conditions. Like you are sending material to the job worker. Job worker's material is subject to payment of tax but not payable if it comes back within a certain period of 1 year or 2 years, as the case may be. So a good auditor will only look into 4-5 areas. One is ITC. Regarding compliances, everything is coming on the net, whether he has filed it or not, or whether these are there. Another important area, I am just giving a clue in the presence of the departmental. You please see, there is a thumb rule, you know there is a thumb rule, concept of thumb rule. I will first ask the company, it's a very, very important clue I am giving you, and I apply to my all clients including this company. What is your input-output ratio? For example, I am just giving that your output is 100 rupees. That you can always get it from the turnover. Saurabh?
Yes, sir.
You also know your input. I am going on a department to, GSTN to GSTN basis. You know your input. Where will you get it in the balance sheet? What is your input?
Sir, in asset side.
What asset? क्या बोलता है? Profit and loss account बोलता है तो आप
अच्छा, PNL side, हाँ.
PL में
Sorry.
side में under which account will you get it? Raw material purchase or raw material consumptions. In the left hand side, you are getting raw material consumption. In the profit and loss account, debit side, and credit side, you are getting turnover. Are you with me or not with me?
Yes, yes, yes.
Very good. You deduct these two. Say 100 rupees is your turnover and 70 rupees is your raw material purchase. What is the difference?
30 rupees.
That is the value additions.
Yes.
Now on 30%, you apply the GST output tax rate, average rate. You know how to calculate average rate for your refund and all these things you have done it. So you see your average rate is 8%. Now on 30 rupees, 8%, that means 2 rupee 40 paisa has to be paid by cash. I find you paid 3 rupees. I'll say it is a risk-free. I find you pay 1 rupee. Then he must have taken more credit. Are you getting my point?
Yes, sir.
Saurav, are you with me?
Yes, sir.
So 2 rupee 30 paisa you are supposed to pay averagely. But you have paid 1 rupee. That means it is a high risk zone. मेरे को देखना होगा भैया लेके आओ. There could be reason for differences, huh? There could be some, because in some cases your inputs rate is more than the output rate. I understand those accountancies. That is why a good tax person can be a good tax person if he has a good knowledge in accounts. So it's a very easy thing. Then on the spot you can catch that you are supposed to pay 24 crores, you have paid 10 crores. Show me your all ITC, forget about everything. I'll check ITC, I'll find that lot of bad credits he has taken. But risk थोड़ा कमती हो जाता है. I have given a note, sir, I am telling you, to the Ministry of Finance. A confidential note to the Ministry of Finance at Delhi, stating what would be the parameters to be set up for this rating system. Don't only go with all these filing, return, all these things. These are all give 20-30%. You can find out the defects by certain parameters. And this is one of the parameters which I have disclosed now.
Mr. Chakraborty has to leave, so thank you, Mr. Chakraborty. He has certain time constraints. So I now request Mr. Chatterjee to please present a memento on behalf of the chamber. Thank you. Mr. Chatterjee will take the first technical session now, which has already been started. We'll take it forward on budget highlights and special economic zone.
Amar hate are 25 minutes are there. Maximum 10 minutes I will extend. So, request you to sit here. We can organize a chart. Can you organize this so that we can save time? Huh? Friends, I will discuss some new issues. All these GST wala cheez, these are all there on a day in, day out basis. And now all of you are quite knowledgeable in your GST compliance areas. Friends, our indirect tax basically closely linked with the country's GDP. Closely linked with the country's GDP. Because those who are not from the economic side, they may not know how the GDP is formed. GDP means the country's total income as a whole for 135 crore people. Then how it is calculated? One of the most important factor for calculation is consumption. Higher the consumption, higher the tax. Because our indirect taxes are all related to the consumptions. are all related to the consumption. So once you have a higher amount of consumptions, you can expect a more vibrant GST collections. Now what is the GDP of the country? GDP of the country today, 22-23 estimate, is $3.4 trillion. In terms of rupee, it is 260 lakh crores. 260 lakh crores, on which GST is payable. So if these 260, now we are expecting will reach to $5 trillion. That means it will reach to around 280 to 300 lakh crores. More consumption, more tax. So my only one thing I just wanted to tell you, that the collections which you find today, 1 crore, 1,30,000, 1,38,000 per month, I am telling you this country within 2 years will easily reach to 1.75 to 2 lakh crores per month. Today, our total revenue collections, income tax and indirect tax, is around 23 lakh crores. And GST alone will be able to give to the government around 20 lakh crores. There is a huge possibility, because of the corona we had suffered little bit in the last 2 years. So, government, in order to increase the consumptions, they are now pushing the market. And we are the indirect tax consultants, should not only concentrate only on GST. There are many new food items have already come for you to understand. And that is why I have dedicated these sessions to explaining. But the time is very restricted. The question is that new government has come out with a new scheme called Phased Out Manufacturing Program, PMP. I know since you are all located in eastern region, we are not that way familiar with the new tax systems which are coming on a day-to-day basis. And you can utilize it for the benefit of the country as a whole and your company as a whole. A new scheme has been announced called Phased Out Manufacturing Program. What is that? Government wants that all key materials will be manufactured in our country. Now, the problem of manufacturing basic materials, important materials, technological materials is the technology or the parts. That is the basic problem. The government said, now in order to protect the domestic industry, they have kept the custom duty for the imported items or finished item at 20 to 25%. You see, there are in customs, basic custom duty, please see me very clearly, understand that there are 3 types of rates are fixed in custom. One is the raw material. Rate is very negligible. It is 0 to 5%. Why? Now I want my domestic industry to flourish so that they can bring the raw material at a lower rate of custom duty, develop it and sell it. Little higher we call intermediate product. it will be around 7.5 to 10%. Little developed item. And if it is a finished item, it will be very high rate of 25%. Suppose if you have to take delivery of a mobile set by way of import, the rate of tax will be 25%. Now government said, no need to bring mobile from outside the India. I am implementing, this has just been announced, and please explain your bosses that they can start the manufacturing in a period of 5 years, and you will be able to import all the capital goods and spare parts at 0 to 5%. For example, this scheme has been allowed to the all electronic industries, chemical industries, etc. You want to manufacture watches. Okay? Government said, if you want to import this watch, the custom duty will not be less than 50%. I do not know exactly, but I am just telling you as government said no. You import 75% of the product. I will give you 0%. But 25% product you source it from domestic sources. Are you getting my point? That 75% of this watch you can import by paying 0 to 5% tax. And 25% material you procure it or you manufacture it locally. First year. Second year, you manufacture 50%, still 0 to 5%. And in a gap of 5 years, you manufacture full item within the country. As a result, that is why its name is phased manufacturing program. The objective of the government is to make sure within next 5 years that any capital goods in the form of electronics, auto, chemical, pharmaceutical, then IT hardware are fully manufactured in the country itself. So once you start it with a small manufacturing indigenization system, slowly you go for 100% manufacture within the country. This is called PLP, under which the advantage is that, number one, you can import all capital goods at 0% rate. You can import all raw materials to the extent of 75 to 80% from outside at 0 to 5% rate, custom duty, manufacture and sell it. And this is now applicable mostly for electronics area, and I am sure within the next 6 months we will find this is slowly extended to the all other 14 projects. 14, what are the 14? Government's main objective is to be self-sufficient in 14 sectors. What are the 14 sectors? Textile, chemical, pharmaceutical, auto, IT, IPS, and then food processing area. These are the areas where country is going to indigenize entire systems through the PMP system, phase-wise manufacturing program. Is it clear? Textile. Textile is the, anybody from textile? No. Textile provides the maximum amount of employment. There we also import certain areas. So textile, steel. Steel means specialty steel. Telecommunications, auto. This you must be knowing the ongoing discussions going on with Tesla. Pharma, then chemicals, electricals, food processing, metals. These are the 14 segments government has seen that these are import dependent. Now, government has allocated 1,52,000 crore. They say that 4 to 7% of your incremental sales, mind that company make 3-4% profit. Now government says, don't worry, I'll give you 4 to 7% depending on the industry as incentive on the incremental sales. If you start a new company, first sales will also attract the PLI scheme. And total 1,52,000 has been allocated. Friends, you are all basically from the industry. You must know that how my company can be benefited, not that only when to file the return or what is the consequences of non-filing return. Which are the new areas are coming and how our company can be benefited with this knowledge. Mind that if you go to the Mumbai, if you go to Haryana, Bangalore, Delhi, they are all UP, Noida particularly, most of the companies are setting up their shops under PLI. You name any company who has not yet come to India. Do you know one company in Vietnam controls 28% of the GDP? Do you know how manufacturing sector can take care of India's issues? One company controls 28% shares, go to the Google, and you will find in Vietnam, Samsung controls 28% of the total GDP of the country. Samsung. And Samsung is now, has already opened and extending its manufacturing operations, which will be double the Vietnam capacity. And these 1,52,000 crores allocations, mind that this money will be spent within 4 to 5 years, and then government will give another allocations. So therefore, I know that eastern sector is little lagging behind in the industry. But those who are in the industry and in the 14 sectors, you can start your factory and whatever sales you make, minimum 4%, maximum 7%, you will get cash incentive from the government of India. So this is called PLI scheme, production linked incentive. So government has already come with phased manufacturing program wherein slowly you indigenize and import your capital goods and also raw materials at 0 to 5% rate, and within 5 years you can totally indigenize your manufacturing facilities and start manufacturing. At present it is applicable to the all electronic goods including smartwatch and power meter. Now slowly they will extend, and secondly PLI scheme, it is gaining huge importance, and today you note down within 2 to 5 years you will find your entire raw materials. Today 30% of the APA comes from China. You know what is APA? You do not know. APA means activated pharmaceutical ingredient, API. These API, based on these API, actually formulations are made and you get medicines based on API. 40% depends on Chinese. This entire API segment is coming under PLI, under the pharmaceutical head, so that within next 2 to 3 years, we are independent about manufacturing of API in the pharmaceutical industry. Now, time is very limited. We have already, I'll take another around 10 minutes further with your consent. I'll just touch upon few important areas. I'll be happy to discuss your issues, but there are many changes have come out in this budget with regard to the GST. You all know that budget has very limited authority about indirect taxations today. Actually, the concept of budget or Part B of the budget should be withdrawn, because Part B consists what? Previously excise duty, service tax, now GST. This is fully controlled by the GST Council. Central government has no role, neither state government has no role. It is considered by the GST Council. तो मेन पार्ट तो चला गया है, सर्विस टैक्स चला गया है, एक्साइज चला गया है, वैट चला गया है. Then customs is only there. That small changes can be done through notification. So for what you do not need to come to Parliament for approval. Income tax, last 62 years, it is 1961 Act, and today 2022, 62 years, 61 years. 61 years we have changed. Huh? So if you still say, no, I need budget for change, it's not necessary. Rates are all streamlined, standardized, no changes are taking place. Small thing you can do by way of passing notification by the CBDT. So what for budget? You do not need it. So we have actively proposed in the last meeting with the Revenue Secretary, sir, you dispense with this. It is not necessary. You have no power today. So still government wants to have some power. So in this budget they have kept certain objective that I want to change this area, but they could not change it. So whatever changes have taken place, proposed changes are there, these are all subject to the approval of the council and passing notifications. So none is applicable from today. Mind that, because central government cannot change it until and unless it is approved in the council. So what are the basic changes? I am not going there. I have notified around 29 changes are taking place. There are certain important changes are taking place, and I also told you that there was an Rajasthan High Court case yesterday. I was just telling you that Rajasthan High Court has clearly stated in the case that ITC cannot be denied based on the failure on the part of the vendors filing of the return. I think Devasisi, you got my bites no? Yesterday. So we always inform our clients to know immediately. So I am not saying it's a good case, bad case, all these things, but we should know about it. So this is that. But this time government said 2B is the boss, and 2B means based on which we take the credit, we will have two different columns. One is the credit which otherwise allowable but not allowed to your case, which could be the areas where, because you must know that your vendor has not paid you or they have not submitted the return. All these informations are not available to us today. Now from 2B, next time when this law is implemented, you will come to know that yes, these are the credits and these are the credits I am unable to get it because either vendor has not filed 1, either vendor has not filed 3B, either vendor has not paid the dues, or his GSTR 1 liability is more than the liability which he has shown in 3B. Why these fake invoices cases are coming? It is department's fault. Because they did not link GSTR 1 with 3B. So kya hua? What happened? That they have shown all the invoices in GSTR 1. Say for example, invoices are 1,000 rupees. So they issued all fake invoices and shown it at 1,000. When they filed the 3B, instead of 1,000, they have shown 100 rupees. Are you getting my point? They have issued 1,000 invoices, amount of invoices, but in 3B, they have shown 100 rupees. They paid the duty. So in the books, they have filed 3B, they have filed 1 also. But 1 value is much bigger than 3B figure. So nowadays, because of the IT improvement and other things, because 3B is not a return actually, many courts have already opined. It is a stopgap, but now it has become a law. 3B is now a return. Supreme Court has also recently certified no, it is a return. Gujarat High Court's decision, they have rejected it. But now, your 3B, 2B is the exclusive thing, and therefore, your 2B reconciliations is very, very important. It will not only appear your block credit issues, it will also appear certain cases where there is a default on the part of the vendor. And what are the areas? That non-filing of 1, non-filing of 3B, or 3B figure is lower than the GSTR 1. Wherever there are reasons, they will do this. So this is a new change. Now there is no question of provisional assessments, provisional credit system. Whatever money is shown in 2B, you have to take the credit, not more or not less. One thing is very important in such case, and I know all of you are doing that, that is running monthly reconciliations. This is very, very important, and you cannot wait till your 31st March while filing your 9 or 9C, all these things. Every month you have to reconcile what credits I am supposed to get and I have not got the credit. It has to be done, and you can take credit only to the extent of credit appearing. So there is no provisional 5%, 10%, whatever provisions was there. So you need not to these things. Now, availment of ITC credit, that is a very, positive thing. You know that we are allowed to take ITC credit in respect of my previous year up to by 30th September or 20th October, whatever you may say. But then now the rule has been changed, and you can take credit extended up to November of the following year. So it is a 2 months extension, and this extension is also allowed. That is a very important thing. Some question came that this provision is also allowed in rectifying your GSTR 1. That means if you want to rectify your GSTR 1, then you can rectify your GSTR 1 for, say, for example, 21-22 up to 30th November 22. Saurav, is it clear? Up to 30th November 22. At present, it is allowed only up to 30th September. So therefore, April, May, June, July, August, September, October, November, 8 months time I have given to rectify your GSTR 1 so that you can correctly give the details and all these things. So this also extension is also allowed to the debit note and credit note. That is a very, very important. That means debit note for 21-22, you can still raise up to 30th November 22. Similarly, credit note for 21-22, you can still raise up to 30th November 2022. This is a very, very welcome changes, and I'll see this is because we also proposed it to the department. Mind that all these things are coming mostly from our representations to the central ministry from time to time, and every year we give a detailed submissions to the finance ministry for various changes which we need. Now, if you do not file GSTR 1, you cannot file GSTR 3B. If you do not file 3B in the previous month, you can suppose without filing GSTR 3B for the month of September, you file in the month of October. You cannot do that. First of all, without GSTR 1, you cannot file 3B. Somebody asked me a question that time, I said, you may file though now 3B में तो सब कुछ हम दे देता है पैसा टैसा सब कुछ दे देता है फाइल को. But if you do not file GSTR 1, your buyer will not get the credit. So how can you file GSTR 1 3B without filing GSTR 1? This is most logical, and I must say it is a highly acceptable propositions by the department. We have circulated all section-wise changes to the department. Now, this is very important provisions which I have discussed. On what grounds the department can disallow your credit? Not block credit. Block credit to section में है. I'll tell you. Supplier has defaulted in payment of tax, and the default has continued for the prescribed time period. Tax paid in 3B, this is very important, is lower than the output tax shown in GSTR 1. Inward supply is received from a supplier who has taken more ITC in 2B. That means it also depends on the character of your vendor. You have to be very careful about your vendor. It appears that he takes more credit than what he is eligible. Supplier has paid higher proportion of tax from his electronic credit register than what is. Now, the law has prescribed that certain amount of cash payment is must, but that rate has not been prescribed. Okay? Now, maybe department will come that whatever your output tax liability, you have to pay maybe 90%, 10% at least by cash. Are you getting my point? These provisions will be there. You cannot utilize 100% ITC credit. You have to pay certain amount of tax. So you can ask me a question, sir, what is the justification? So long I am making the payment from ITC credit, department should be happy. My question is that why they are not happy, and there is a logic that if you do not make any cash, that means you are not generating any profit नहीं है, you are not generating any cash flow. You are not your business is not viable. Your business is not viable. That is why I said that whenever any audit comes, you must see, or as a company you should keep this calculation ready, that what is my sale, what is my purchase, consumption, minus karo, that is my value additions. This is my positive value additions, on which my average rate of tax is 8%. So 20 rupees is my positive value additions, 8% is that 1 rupee 60 paisa, and I have paid 2 rupees. पहले डिपार्टमेंट को बता दूं, जो सर I have already paid excess, and this is what it demonstrates. So this is a very important area. Once you are convinced, no, I have paid more than that, you know that the case is in your hand. ठीक है ना? किसी को मत बोलना भैया. So these are the areas where there will be a separate column in 2B where all these disallow would be there, so you cannot take credit. So by and large, these are the major areas. These we have discussed. 3B also discussed. You can also change the 3B, and the time period is 30th November. So GSTR 1 and 3B you can rectify till 30th November of the following year. And one more important thing is that whenever there is any disputed credit, I always suggest to my clients that you take the credit, inform to the department, a very big company, and the credit is disputed. Credit is disputed to the extent, I'll give a very peculiar issue, Arun. There was a LD by Reliance Industries Limited. And Reliance Industries Limited does not believe is 1 or 2 rupees. They are all in crores. So they issued a liquidated damages on the client and paid tax also. They issued invoice. By way of debit note, they paid tax, amount was appearing in the 2A on the party. Party said, I do not accept. Now here I would like to understand from you. This is a very critical case. And the amount of ITC is to the extent of 4 or 5 crores, 4.5 to 5 crores. Now I want your answer. The department said, Acha, the credit was appearing in 2A, but party did not take the credit, and even it is not accepted in 3B. They have not shown it as a purchase, the LD bills. Now after 1 or 2 years, because of the COVID, it took long time, there was a separate committee decided, and ultimately they rearranged the LD amount. Are you getting my point? And that is in the year 21-22. And this matter is pertaining to 1920. That means 1920 it was appearing in 2A. They did not take the credit. But 21-22, they ultimately decided, accepted, and took the credit in 21-22. Is it clear? But the credit was taken much after the due date. 1920 का वो तो 28th September है, September 20, and now they are taking in the month of 22 or 21 October or something. Department said, I will not give you the credit. This sort of problem is there. I am countering to the department, said, okay, you cannot take the date of the invoice or date of the LD, which is 1920. You have to consider date of settlement. Because I have not accepted the invoice. If I don't accept the invoice, where is the question of taking credit? Let party pay the money in 1920. What is my problem? I am not accepting, I am not acknowledging. So for the purpose of invoice, you should always consider the date when you are acknowledging the date, and not the date which is mentioned in the invoice. Are you getting my point? But department cannot give any judgment in my favor. We have to go to the High Court. I have said to the client that please be sure you will get 100% judgment in your favor, but nothing will come from the department. You also think that I have received a invoice. It is 100 rupees. After 2 years, it is decided it will be paid 80 rupees. And I have not accepted in my books. I have not taken it in my balance sheet. I have not considered any provisions in my books. How can you say invoice date is 2 years back? Because you changed the entire LD amount even after discussions. It's not that they did not change, they changed the amount. So therefore, for all practical purposes, invoice date is a very important. I have tried to find out the case law, relevant case law. In one case I have said that the invoice means where you get the lawful value of the product. Lawful value. The lawful value, I have got it in 21, 22. So this type of matter might come in the arbitrations or in the litigations, but this is a very, very important. Friends, I will not take much time. My colleague and my friend has already come, and you all know that he is a very knowledgeable person. In the whole indirect tax segments, we worked for around more than 25 years side by side, and he will, he is basically, I have seen in his various deliberations, excellent in works contract, real estate, and all these areas. So Arun will take care of EPC contract, is very, very important. You all know whether it is works contract or with what rate will be applicable. That's the very, very, what is EPC, if it is given separately, engineering separately, procurement separately, commissioning separately, whether those are the very complicated issues. So this time, as I have told you, that this time we have kept real estate, educations, e-commerce, everything separately, so that you can discuss this item. And I will request Arun to please come and take my seat and deliberate to our members. They are mostly our members. And Arun, we are arranging this offline. This is the first time after 2 years. So it is our great expectation that things will improve in the next 4-5 months when we can organize several such type of interactions. These interactions which I was doing or Sir was doing, it's missing in the online courses. Online courses, suppose I see your face, I can tell you whether you have understood or not. So this sort of thing was missing, which cannot be done in the online, but offline we can take together and really. So over to Arun and Sarvani, you please.
Thank you, sir. We are happy to present you a memento for on behalf of the Bengal Chamber.
Thank you very much. Thank you, and we all need your help. You are in the East, that doesn't mean knowledge is lacking. We have a lot of good speakers, good people, we can take it, but your cooperation is needed, your attendance is needed. Then we can extend to the in more, and we can go to the foreign trade, we can go to the collaborations, exchange, everything. And this is the right time to add values. Please understand qualifications, CACS, this just gives you little bit. Until you are not updated with the system and the country, the way it is running, we have to be updated every day. अभी PMLI चला गया, अभी phase manufacturing system आ गया है, then bond manufacturing system आ गया. If you do not know, then it's very difficult. So please attend to our all workshops, okay, and extend your cooperations. Then we can organize this. This is a non-profit making company. We do not take even single rupee. So therefore, your cooperation and encouragement will help us to organize similar thing. Thank you. And,
Thank you, sir. I now request Mr. Arun Agarwal to please be on the dais and take the next session on works contract and EPC contract.
अच्छा ठीक 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 है
দাঁড়িয়েও বলতে পারবেন ওখানে বসেও বলতে পারবেন অসুবিধা ফ্লাইট স্টিকার আছে এটাকে চেঞ্জ করতে আপনি সেটা লিখতে পারবেন কিন্তু এটাকে তাহলে এদিকে আপনি যেখানে ওদিকে করতে পারেন আপনি স্ক্রিনে করলে Good afternoon, friends. It's a pleasure to be here physically to share some of the thoughts on the subject after a long time of probably more than 2 years. As Mr. Chatterjee was saying, when you interact physically, definitely the interaction is much more interactive and more you can relate to the audience or to each other, means basically to each other. So that is always a pleasure. Now friends, coming to the topic, and I'm indebted to Bengal Chamber of Commerce for giving me this opportunity to come here and share my thoughts on the subject. Of course, we have some maybe around 40 minutes time, not even that. Around 35 to 40 minutes time we have. So let's come directly to the topic. Now friends, works contract and EPC. The subject has always been in controversy. EPC contracts or works contract for that matter has always been into controversy. So far as taxation is concerned, why this has been into controversy? Now friends, works contract is a typical contract. We have a general idea about what is works contract, right? Works contract is a contract where I have, let's say if I have got a works contract, that means I have got a contract, EPC contract, let us consider EPC contract. So I have got an EPC contract from a company for erection of a plant and machinery, let's say. That is the simplest example I take. So in that process, I'll be procuring various materials, say steel and other materials, other components, spares, etc. And I will assemble and erect the plant and machinery at site, and I will put it in a commissioning position. So that once you just switch it on and the plant is ready to operate. At that condition, I will deliver it, right? So if that is the contract, that means this is involving drawing, designing, etc. That is engineering. Then it involves procurement, that means various materials I will procure, and then construction. So I will do the construction and then I will deliver it, correct? So, and it is called erection, commissioning and installation. So commissioning means up to the stage of commissioning I will deliver. So I will deliver you the key, you just key it on and it is operational, correct? If that is so, that means it is involving supply of goods and supply of services both. Since it is involving supply of goods and supply of services both, it is a composite contract. It involves supply of material, supply of labor or services, engineering, etc. and some profit obviously. So that is why it has been into controversy since beginning. So here I have just tried to show you a pointed. আচ্ছা মেবি অনেক দূরে হয়ে যাচ্ছে বলে পয়েন্টারটা হ্যাঁ আছে কিন্তু একটু অনেক দূরে হয়ে যাচ্ছে বলে দেখা যাচ্ছে ঠিক আছে. So see, it is a typical contract I have taken here in case of Gannon Dankali versus State of Rajasthan 1992. It was held that the taxable event is transfer of property in goods involved in execution of a works contract. Transfer of property can take place by any one of the following. So three different words are used here: accretion, accession and blending. Now what is accretion? Movable goods are embedded in immovable property. That is construction contract. In case of construction contract, say I am taking a contract for construction of a building. So I will construct the building by brick and cement, sand, etc. Brick by brick I will do the construction. So by each process, the steel, the cement, the bricks, the sand, the stone chips, everything is getting transferred. So as and when I am using, say today I have used, let's say 2000 bricks along with the required material, that is cement, steel, etc. So the property in that material is transferred to the contractee from me. I have used it. I have not sold him cement, or I have not sold him steel, or I have not sold him bricks. So it's not a sale contract. But I am constructing, and during the process of construction, by way of accretion, because these goods, that is bricks, sand, cement, etc., have been embedded into the immovable property, and the property is transferred. Right? This is called accretion. Accession. What is accession? Movable goods are attached to movable property. Like say spare parts attached in car. Let's say when you take your car to a workshop, the workshop will do what? Maybe some spares he will supply, and he will do that repairing or overhauling job, etc. So that might involve his labor as well as material both. So the goods are embedded into movable property only. Car, which is movable. In case of construction it was immovable, but in case of car it is movable. So movable goods mixed with immovable, movable goods mixed with movable. So when it is movable with immovable, it is called accretion. When it is movable with movable, it is called accession. And then blending. So movable goods mixed with goods of contractee. So that is when a job worker, suppose you take your goods to a job worker, let's say I take some plastics to a job worker and ask him to convert it into bottles, so he will convert it. So he is converting my goods, he may be mixing some of his goods also with that, and then he is converting and he is supplying it to you. So blending means movable goods mixed with goods of contractee. That means you are taking some goods, I am converting it with my goods also mixed with that. So these are three terms used, very commonly used: accretion, accession and blending. Now what is happening? By way of accretion or accession or blending, that means in the process of accretion or accession or blending, property in the goods is being transferred from contractor to contractee. So it is not a pure contract for sale of bricks and cement. It is not a contract for sale of spare parts by the workshop to you. It is not a contract for sale of that material by the job worker to you, but the job worker is using those materials, the workshop is using his materials, the contractor, that is construction contractor, is using his materials, and by way of this process of accretion, accession or blending, the property in those goods is being transferred from the contractor to the contractee. Since this is the feature of a works contract, typical works contract, and this is what happens even in case of EPC contract also. EPC contract is nothing different from works contract. So EPC contract, the only thing is works contract may not be EPC. EPC involves all the three elements, that is limbs, that is engineering, procurement and construction. In some case of works contracts, maybe engineering is not involved. Suppose you are doing the engineering, you are giving me the drawing and you are asking me to do your work as per your drawing. So engineering may not be involved. But anyway, to some extent, some engineering will be involved. Because in the process of erection also some engineering will be done. In the process of construction also some engineering is mixed. A typical mistri, a mason, if he is doing some construction work, there also some engineering is involved. That engineering part portion may not require any qualification. That is a different issue. So nevertheless, I am taking EPC at par with works contract for that matter. So since this is the feature of the contract, now why it has been special, why it has been into controversy always? Way back in 1950s, there was tax payable on sale of goods. This company, Gannon Dunkerley, the same company Gannon Dunkerley, way back in 1950s, they said that we will not pay tax on sale of goods in case of works contract. tax was payable on sale of goods, and the government was levying and collecting taxes, sales tax from the works contractors as well. They were saying that you are a works contractor, so suppose you have taken a contract for 50 lakh rupees, so out of 50 lakh rupees, the material value is, let's say, 30 lakh rupees, so you pay tax on 30 lakh rupees. So how much is steel, how much is cement, based on that, on the value of material, you pay tax. That was the traditional practice. So this company categorically said that we will not pay tax on this. Why you will not pay? They said that I am not selling steel, I am not selling bricks, I am not selling cement, I am not a seller. I am a works contractor. Why should I pay you tax on that? I am not selling. There is no sale involved. And in 1958, Supreme Court upheld their contention, saying that yes, in case of works contract, since it is not a contract for sale of goods, so no tax will be payable on that sale of goods. It is not a sale of goods. So therefore, in 1982, the Parliament amended the Constitution. The Constitution was amended to include some deemed sales. Some deemed sales. There are 5 other types of deemed sales, one of which is works contract, where it said that transfer of property in goods involved in execution of a works contract will be treated as a sale. So if it is a works contract, but that works contract invariably involves transfer of property, so they said that transfer of property in goods involved in execution of a works contract will be treated as a sale. That means a deeming fiction is created in the Constitution to treat this as a sale of goods. And therefore, sales tax was then payable after that amendment. So that was in 1972 or 82 probably. So that by way of that deeming fiction, this sale of goods concept is brought in. So this is called deemed sale by way of in case of works contract, right? So after that, sales tax was payable. That was the case so far as sales tax is concerned. Similarly, in case of service tax, in 2003, for the first time, service tax, you know that way back in 1994, service tax was introduced to start with only 3 services: stockbroking, general insurance, telephone. In 96, another 3 services. In 97, another 6 services. In 98, another 12 services. Like that, every year some services were added in the list, list of taxable services. So in 2003, construction, erection, commissioning, etc. Services were included in the list of taxable services. But still some companies said that we will not pay tax on that. Why you will not pay? Because they said that we are not providing any service. It is a works contract, and taxable service tax is payable only on taxable services which are specified, and since no specified services are there, construction service means per se purely a service contract and not a works contract, so therefore we will not pay any service tax on that. And they said that even if suppose assuming that the service portion in the, because if there is a works contract, so if it involves transfer of property in goods, it also involves provision of service. So suppose to the extent of 50 lakhs is the contract value, out of which suppose 30 lakhs is the material value, so 20 lakhs is the service value. So that service value, service element is there, so that should be taxable. So the department said that you should pay tax. That was challenged. The court said that no. In case of erection, commissioning, installation, since the contract value is inclusive, service portion is not separately delineated and it is not separately identified or it is not separately measured, so it cannot be taxed. So service tax was also rejected. Then in 2007, probably, they introduced works contract as a specific service in the list. So there is again another deeming fiction created. They said that the service element in the works contract, where there is a works contract, where the transfer of property in goods is involved and it is taxable as sale of goods, then the service element will be treated as a service. So another deeming fiction created in the service tax law, correct? Am I clear? So a deeming fiction created for the purpose of sales tax on goods, a deeming fiction created for the purpose of tax on services. So works contract is a pregnant contract where goods and services both are involved. So goods are being taxed by virtue of this deeming fiction, services are being taxed by virtue of that another deeming fiction under the sales tax law or service tax law, as the case may be. Sales tax law subsequently replaced with VAT, that is VAT, value-added tax, correct? Then comes in 2017 we have now, so 2017 onwards we now have GST. Now what about GST? What is the provision in GST? So this we have already discussed. Now in GST, what they have done, you know, GST, I'll take you through only some selected slides, not all slides, right? So that is why I do a little bit of maybe sometimes forward and sometimes backward. But in GST, what they have done, in GST they said that GST is payable on, you know, supply GST is payable on supply, and that is specifically said earlier, like say in case of VAT it was on sale of goods, service tax was payable on provision of services. But in GST now it says that GST is payable on supply of goods or supply of services or both. So if you are supplying goods, if you are supplying services, if you are supplying both, in all cases GST will be payable. So that means earlier VAT was collected by the state government, service tax was collected by the central government, but for both of them, the valuation was different, valuation provisions were different, rate of tax was different, input tax credit provisions were different, everything was different. Now that we have GST, which is a common law, which involves or which consumes or subsumes both VAT as well as service tax, along with central excise and other taxes, as sir was saying. So since now we have supply, the concept of supply, that is the taxable event, that is the taxable object. So the definition of supply, you know, maybe it might have been discussed also, I am not sure, but nevertheless I am not going into the definition of supply. That simply says supply involves, a supply includes all forms of supply for a consideration in the course or furtherance of business, correct? Supply includes all forms of supply. Now all forms means there could be different forms of supply. So it is said that all forms of supply such as sale, transfer, barter, exchange, lease, license, rental or disposal. So 8 different types of supplies are envisaged there. So that there could be 9th one also. So any kind of supply, if it is a supply, and supply means what then? So the term supply per se is not defined. So supply, if you look at the dictionary meaning of supply, supply means to make something available which is required. I may require a glass of water and someone may supply me that glass of water. So that is also supply. So supply, all forms of supply, but for a consideration in the course or furtherance of business. So that supply, when it is for a consideration and that too in the course or furtherance of business, then only it will be treated as a supply. That is the definition. Now if that is the definition of supply, but supply, it has to be supply of goods or supply of services or supply of both. So since here it is supply of goods and services both in case of works contract, so then how do you treat it? Because in GST law, the basic idea was very noble that there will be no discrimination between goods and services. GST सबके ऊपर पेमेंट करना है और सबका इनपुट टैक्स क्रेडिट मिलना है. That was the concept, basic framework. But then gradually we found when finally the GST law is enacted, there are discriminations between goods and services in various places for the purpose of determining the time of supply, for the purpose of determining the place of supply, for the purpose of determination of type of supply, for the purpose of determination of rate of tax. For all these purposes, there are discriminations between goods and services. So how to treat this works contract for that? So therefore, they have a concept of composite supply and mixed supply. Now what is composite supply and what is mixed supply? We can just have a look at the definition. Composite supply is defined to mean consisting of 2 or more taxable supplies of goods or services which are naturally bundled and supplied in conjunction with each other in the ordinary course of business, one of which is a principal supply. Please try to read it. Consisting of 2 or more taxable supplies. So there could be more than one taxable supply. And that too taxable supplies of goods or services. So that there could be some goods, some services, or some different 3 types of goods or 4 types of services, or a combination of goods and services, which are naturally bundled. So all these are naturally bundled. They are bundled together and being supplied naturally in the natural course, not artificially. And then supplied in conjunction with each other in the ordinary course of business. It should be in the ordinary, not under special circumstances, in the ordinary course of business, one of which is a principal supply. And out of those supplies, one will be a principal supply, not more than one. Not that everything is a principal supply. So there has to be a one principal supply. And the illustration given is goods packed with packing materials, transported and insurance. So when you are selling some goods as a seller to some buyer on FOR destination basis, so naturally the goods being sold, that has to be transported, and for the purpose of transit, you have to obtain insurance also. So insurance, transportation, packing materials, everything is involved. So it is a composite supply. So composite supply means, let's say if I am supplying, say tea packed in 15 kg chests. So that is a packing material. So tea plus packing material plus transportation plus insurance. So it is a composite supply. That is a simple example, correct? Now what is mixed supply? Mixed supply means 2 or more individual supplies of goods or services made in conjunction with each other for a single price, where such supply does not constitute a composite supply. So mixed supply is almost similar, that here also two or more individual supplies of goods or services. So it is also a combination of goods or services made in conjunction with each other. There also we had for a single price where such supply does not constitute a composite supply, but it should not constitute a composite supply other than composite supply. So what is composite supply then? How can you differentiate whether it is not a composite supply? So what is principal supply? Now composite supply means, it says that composite supply means one of which is a principal supply. So that means in case of mixed supply, there will not be only one principal supply, there can be more than one principal supply. So what is principal supply? Principal supply means the supply of goods or services which constitutes the predominant element of a composite supply and to which any other supply forming part of that composite supply is ancillary. So one is principal, predominant, and the others are ancillary. So ancillary means something which supports the principal. So suppose when you are supplying tea in tea chest and being transported with insurance, so what is the principal supply? Tea is the principal supply. So packing material is ancillary, transportation is ancillary, insurance is ancillary. So that is only helping you to deliver the principal supply in right manner. Correct? So that is ancillary. Now, see, let us compare the two, composite supply and mixed supply. So composite supply and mixed supply. Composite supply is consisting of two or more taxable supplies. Mixed supply also two or more individual. Here it says two or more individual supplies. Then it says two or more taxable supplies of goods or services which are naturally bundled. But in mixed supply there is no concept of naturally bundled, right? And then it is said that it's supplied in conjunction with each other in both the cases. Then it says that in the ordinary course of business, but on the other hand, here it is not in the ordinary course of business. So naturally bundled in the ordinary course of business, this accent is missing in mixed supply. So it is artificially mixed, that means. And here it says that in the ordinary, one of which is a principal supply, in mixed supply it is other than that one, that means it may be more than one, or maybe there is no principal supply. Correct. And also it says that for a single price, so mixed supply is also more than one supplies but for a single price. Since more than one individual supplies are clubbed together, see the example we had taken in the earlier slide probably. Mixed supply illustration, a package consisting of canned foods, sweets, chocolates, cakes, dry fruits, fruit juices, all clubbed together in a basket, correct? We all quite often purchase this as a Diwali gift or New Year's gift or something like that. So that is not naturally bundled in the ordinary course of business. So artificially, that means for some specific purpose that has been combined together and a single price is being charged. But for the tea along with packing material, along with transportation, along with insurance, you cannot charge separately. That this much for insurance, this much for transportation, this much for packing material, this much for the main product. So it is naturally bundled in the ordinary course of business. No difference. ड्राई फ्रूट्स वाला केस में और ये जो हम लोगों ने केस दिया दोनों सेम है, बट सो इट इज नॉट नेचुरली बंडल्ड, सो दैट इज व्हाई इट इज मिक्स सप्लाई. So what is composite and what is mixed, that is the concept we could understand a little bit. Now if that be so how do you tax the works contract then? So works contract is a contract where you are clubbing goods or services, various goods and various services, a combination of different goods and different services. Let's say construction contract, if you take building construction contract, so the various materials are involved, bricks, sand, cement, steel, chips, so many other things. So which one is a principal supply? Is it a composite supply? Just half a minute of thought. Is it a composite supply or a mixed supply? Composite. Why composite?
Separate identity of the all the raw materials and services are not found at the end product.
Sir, we have to refer to the definition. We have definition of composite supply, we have definition of mixed supply, and then decide.
It's coming in the ordinary course of business.
Correct.
It's coming under the ordinary course of business.
So what
This
are
break.
naturally bundled?
Pardon,
What are
sir?
naturally bundled? Let's say I am taking 4 items, steel, cement, bricks and sand, major materials. So these are the 4 items. You are saying these 4 are naturally bundled in the ordinary course of business. So which one is the principal supply? If it is a composite supply, then which one is the principal supply? Sorry? A little loud. Mixed supply. So it should be a mixed supply, right? Sir, look at the cost sheet of the contractor. Just have a look at the cost sheet of the contractor. We discussed the contractor is giving you some materials, a combination of some materials and some services. Why are you skipping the services? So he is giving you construction service, right? He is not only supplying you the material, he is using the material for construction. So he is giving you construction service. And that construction service, so it is a combination of goods plus services. So 4 materials plus 1 construction service. So 5 different items. Now tell me which one is the principal supply, or it is a mixed supply or composite supply? Correct. So construction is the principal supply because you have engaged him for construction. What Gannon Dunkerley said, that I have been engaged for construction. So you are engaging him for construction. And for the purpose of construction, he needs all the materials which he is procuring. Maybe if you look at the cost sheet, suppose out of 100, 10 is his profit. 90 is for material and labor. So maybe 60 rupees is material and 30 rupees is labor. So labor portion is only 30, material portion is 60, double. But still it could be a construction contract. So only the value component does not decide. What is the determinative factor then? The predominant intention is the determining factor. What is the predominant intention? Why you are engaging him? Are you entering with in a contract with him for supply of cement? Because cement you may be procuring anyway from any other dealer or manufacturer. You are not entering for sale of or purchase of steel, but you are engaging him for construction purpose. And for the purpose of construction, you are asking that, okay, सारा material भी तुम ही ले आओ, construction कर दो, क्या लोगे ये बताओ. So you could go in 2 ways. You could say कि भाई तुम construction कर दो, material सारा हम दे देंगे. तो हम दे देंगे तो मैं तो manufacturer नहीं हूँ, कहाँ से लाएंगे? So I can bring it from some other sources, some other vendors. So I may have different vendors for material and he may be only a service vendor. That is possible. Or I may ask him कि सारा तुम ही दे दो. एंड सारा अगर तुम ही दे दो और एक सिंगल कॉम्पोजिट वैल्यू कर दिया उसका कि पर स्क्वायर फीट हम इतना रुपया लेंगे, सो देन यू डोंट हैव सेपरेट वैल्यूज फॉर स्टील, सीमेंट एटसेट्रा, ब्रिक्स एटसेट्रा, कंस्ट्रक्शन एटसेट्रा. यू डोंट हैव सेपरेट वैल्यूज. सो देयरफॉर सिंस दिस इज अ कॉम्पोजिट contract for supply of various goods and services in combination, then you look at the dominant intention, dominant element. Which one is dominant element? If it is construction, so then that means that is the principal supply, that is the definition of principal supply. And applying the definition of principal supply, that becomes a construction contract, and therefore it is called a composite supply. The cement, steel, etc. are not principal supplies. So, and if it is a composite supply, then it will be treated as the supply of the predominant element itself, that is construction. So that is why it is not to be treated as a supply of goods, but it is to be treated as a supply of service. So that is why they have given schedule 2, where they have said that if it constitutes a supply as per 7.1, the definition of supply is given in 7.1, section 7.1, if it constitutes a supply as per that definition, then you come to schedule 2 and look at whether it will be treated as a supply of goods or supply of services. So then you come to schedule 2 and there you will find that it is said that it will be treated as a supply of service. Why it will be treated as a supply of service? Because the construction is the main element, principal element. Am I clear? So that is how they have treated it in GST. So what I was saying is the works contract has always been into controversy because of the complicated nature of this transaction, and therefore issues were there in VAT, sales tax, then VAT, issues were there in service tax. Every time deeming fictions were created. Now in GST also they have created this fiction of composite supply and mixed supply concept, and by virtue of this composite supply definition, read together with the other sections and schedule 2 etc., it is now said that in case of a works contract, it will also be treated as a supply and it will be treated as a supply of service. So one, it will be treated as a supply, Two, it will be treated as a supply of service. Correct? These two are there as per the GST law. And accordingly, the rate of tax as prescribed in the respective notifications that will apply. So that is the basic issue. Now, next point is what is the concept of, or just one second. Definition of works contract. Yeah. See, what is the definition of works contract? How they have defined works contract? Works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, commissioning, etc. Correct? So 14 different elements are there. So works contract means a contract for building, or a contract for construction, or a contract for fabrication, or a contract for completion, or a contract for erection, etc. of any immovable property, wherein transfer of property in goods, whether as goods or in some other form, is involved in execution of such contract. So any contract, now mind you, what is the taxable event here? Works contract means a contract for construction. I am reading it like this. Works contract means a contract for construction of any immovable property. So construction is the taxable event, if there is any construction, but provided the transfer of property in goods is involved. So if it is a pure and simple service contract without any material being involved, then it will not be a works contract. Correct? So almost similar to the concept which was there earlier in VAT or service tax, etc. A contract where transfer of property in goods is involved, then it will be treated as a works contract. A contract for construction where transfer of property in goods is also involved. So that means construction plus material both are involved. Then only it will be treated as a work contract. Number one. Number two, if you look at of any movable or immovable property, so movable, I have cut movable. So earlier in VAT or in service tax, it was both movable or immovable. But now it is only restricted to immovable. That means, suppose when you are taking your car for repairs and he is doing repairing of your car and supplying some accessories also, and total job value is, let's say, 10,000 rupees. 8,000 rupees is materials worth of spares supplied and 2,000 rupees of job done. Whether it will be a works contract? Why no? Movable property. Earlier it was also works contract, but now it is no more a works contract, mind you. But then what if it is not a works contract, then what? It could still be a composite supply. Correct? It could be a composite supply. So composite supply means various supply of various goods and various services in a combination. Correct? It may be one goods and one service, or two goods, two service, 5 goods, one service, 2 goods, 5 services, whatever may be the combination, but combination of goods and services both. So works contract means a contract involving both. Correct? But still, so it is a composite. So composite supply means a combination of goods and services. But when this combination of composite supply is in relation to immovable property, then it becomes a works contract. When it is not in relation to immovable property, then still it is a composite supply. It could be. It may be a composite supply, but not all composite supplies are works contract. Only those composite supplies which are attributable to immovable property, that is only a works contract. Correct? Other composite supplies will be treated accordingly as per the other principles that I am not discussing here. But for the purpose of works contract, it is only a composite. It has to be, number one, a composite supply, and number two, it should be in relation to immovable property only. That's the most distinguishing feature. Correct? If that be so, now the friends, the main point, which in fact sir was referring to also, Mr. Chatterjee was referring to also. Suppose when either you as a contractor are undertaking a contract, or you as a company are giving a contract to someone else, right? So how do you structure your contract? So whether that contract should be an EPC contract, or you should give separate contracts for materials and separate for services. Suppose you want to undertake interior of your office. Your company has newly built an office, you want to do interior of your office. And total interior value will be, let's say, approximately 2 crores, out of which maybe hypothetically I am saying that 1 crore 20 lakhs will be material and 80 lakhs rupees will be labor. So material plus attributable profit, labor plus attributable profit, like that. So how do you structure your contract? Whether you give him turnkey 2 crore means EPC contract 2 crores, or you give him nahi bhai, material ka 120 and labor ka 80, or for that matter you may ask him ki for labor 80 you take and material everything I will supply, I will source it from other vendors, or you might tell him that okay, some materials you supply and total you take 1 crore and other materials I will procure from somewhere else. Any combination you can go for. So how do you go about it? Whether it is possible? What would be the tax implication? So first I would look at, if at all, we are all finance people. So first I would look at, if at all, the tax components involved. So what is the rate of tax or total tax component if I give him a turnkey 2 crores contract? If you give him a turnkey contract for 2 crores, the rate of tax applicable will be 18%. So 2 crores plus 18%, so 36 lakhs. Total tax component is 36 lakhs. Now I am not for the time being considering whether you will get input tax credit or not, and if at all, how much input tax credit you will get. That aspect I am not considering at this moment, correct? Later on I will address that. For the timing, so your cost will be 36 lakhs on account of tax. But if you think that ये जो 2 crore का material है, उसमें से some 2 crore का जो contract value है, उसमें से 120 is material, out of which let's say 40 lakhs rupees is for a particular item, let's say laminates, which may be taxable at 28%. So will you purchase it separately or will you involve it into his contract value? Contract value, so that the rate of tax comes down. But he will actually procure at 28% only. So since he has some value addition, so that will be absorbed from into his cost, correct? Are you getting my point? That you can do. But suppose if you find that 30 lakhs rupees is plywood and plywood is taxable at 12%, then what? So I can do it, I can separate it from the contract. But only separation is it sufficient? Can you do it legally? Huh? Department, so always they find an intention behind your every act, correct? But you have to look at the law. So the law does not stop you from doing that. You can procure any material from anybody, and if it reduces your tax component, how can they stop you? That is your freedom. I can purchase laminates from other vendor, plywood from other vendor, any vendor I can go for. और इवन आई कैन टेल हिम ऑल्सो दैट ओके तुम सब इसका क्या नाम प्लाईवुड का 30 लाख रुपए है, इसका तुम अलग कॉन्ट्रैक्ट कर लो, प्लाईवुड का अलग से मेरे को बिल बना दो, बाकी तुम 170 ले लो काम का. यू कैन ऑलवेज से दैट. नो वन कैन स्टॉप यू. बट हाउ टू डू दैट? while doing that, to ensure that it does not fail the test of the law, for that you have to separate the two contracts. It has to be two separate supplies, independent supplies. Mind you, if you go to the definition of mixed supply, look at it. Individual supplies of goods or services. Two or more individual supplies made in conjunction with each other for a single price. So number one, it should not be for a single price. So you are giving separate prices for the two, correct? And they have to be individual supplies. Now how do you treat it, whether it is individual supplies or it is a combination of supplies? Supplied in conjunction with each other, or it is individual supplies supplied separately. Here it is said that individual supplies made in conjunction with each other for a single price. So how do you decide about that? You have to take care of everything, all these components. Say, take a very simple example, normal life example लीजिए आप. You go to Big Bazaar, correct? When you go to Big Bazaar, you find that one bottle of shampoo, you choose one bottle of oil, you choose one soap. Each one, let's say 100 rupees. One is taxable at 5%, one is at 12%, one is at 18%. So your total bill value is 300. How much you will charge? How much you will charge? How much will be the tax component on 300? It will be a composite supply or a mixed supply. Individual supplies, it is neither a composite supply nor a mixed supply. Because in mixed supply, to be a mixed supply, it has to be supplied in conjunction with each other. So it is not being supplied in conjunction with each other. He has displayed different products. Now that is on display. In case of contractor, it may not be on display, but it may be on display in his tariff. He might give you a quotation that इसके लिए हम इतना लेंगे, इसके लिए हम इतना लेंगे, इसके लिए हम इतना लेंगे. You might take your choose and pick and choose and pick, correct? So आप जो लेंगे individually, whether you are taking or you are taking it in conjunction with each other. That is very important. So if you tell him that you bill separately for plywood and separately for other items, but the contract says that plywood has to be match the quality and your work has to be in parity with the plywood, and if there is any defect I would catch you, then what? See, that is where we commit mistakes quite often. The contracts we are at times not able to separate. Now again, separating contracts does not necessarily mean that it has to be two separate documents. Maybe under a single document, but still two separate contracts with separate independent transferability, independent answerability you can have. Suppose if you are issuing a tender, you are inviting tender, means floating a tender, inviting quotations, and then you are giving some contract to someone. Then what? How do you do it? So quite often you will find some companies do that, okay, supply to be billed separately, services to be billed separately, but for the supply they are saying we will retain 10% until unless the job is completed and we are satisfied with the job. So if you are not satisfied with the job, you will retain 10% from the supply, then how can it be an independent supply? Are you getting my point? So you have to make it independent, individual supplies. So to make it individual supplies, it cannot be interdependent. It may have huge impact on any contract. Suppose a contract may be worth hundred of crores or thousand of crores, but still, whether these two contracts, quite often you have two separate contracts, but the answerability has to be delineated from each other. As long as there is answerability with each other, because in both the contracts you will find that यहाँ पे भी 10% retain करेंगे, यहाँ पे भी 10% retain करेंगे, and after commissioning, next 1 year, if it runs smoothly, then you will release everything. That will, your case is gone. Correct. So that disconnect has to be there. It cannot be connect. That connect should not be there. Are you getting my point? Why I am trying to highlight this? So composite supply and mixed supply versus individual supplies or independent, separate supplies. So separate supplies is different from composite supply or mixed supply. So when it is a composite supply, then it is a works contract as a whole. But as soon as you make it separate, supplies separate, work separate, then they will be treated separately. Accordingly, the rate of tax wherever, whatever is applicable, it will apply. Normally, it may so happen that suppose you are a manufacturer or you are a service provider or you are in some other business. Today, almost all the supplies of goods or services are taxable. So if you are into business, that means you are paying taxes on your business. And if you are paying taxes, then as far as all your supplies are eligible for input tax credit, you don't bother. That chalo, itna complicated क्यों करेंगे? Let us give him a EPC contract. Whatever tax he will charge, I will adjust it from my output tax liability, so I don't mind. That is possible in many cases. But in some cases, it may so happen that in your business, the value addition is very less. Let's say hardly 5% value addition you are doing. So that means your input, if you are and suppose that value addition is not enough to consume your input tax credit, and suppose you are setting up a plant and machinery where, let's say, huge input tax credit will come, and you will need 10 years to consume that input tax credit. So in that case, you may not be interested to block your fund into that. Then you might have to structure that, number one. Number two, somewhere if you find that yes, major materials are where the tax rate is low. Let's say, for example, solar power. In case of solar power, the solar modules are taxable at 5%. And if it is a works contract, it is taxable at 18%. So the solar people came, they said that, sir, what is the rate of tax I should apply? So I'll come to that issue later. Maybe I don't have much time, I know, but still, already it is 1:40. Madam, can we continue for next 10 minutes? Too less, but anyway, nevertheless. So, in case of solar modules are, he said that when I am setting up a power plant, solar plant for someone, suppose out of the total contract value, 90% value almost is for modules and 10% is for erection, setting up. But still, if I take the entire contract, it will be taxable at the rate of 18%. And if I supply the modules separately and do the installation separately, are you getting my point? Then on the supply is only 5% and on the installation part, it will be 18%. So that was the issue. I told them, yes, anyway, it has to be 18% if you do that. They said that we cannot do separation separately because earlier we had some contracts and whatever, some complications were there. But subsequently, the department also said that, okay, they heard about it. They listened to their representations and then they said that, okay, what we will do? Let us do a compounding system. They said that 60-40 ratio. What we will do for any solar power plant, 60% value will be taxable at 5% and 40% value will be taxable at 18%. That is a formula they have come out with, the department, in the tariff notification itself. So that is how they have resolved, but still 40% is because in some cases they are saying that if it is hardly 10%, so why even on the 30% I will pay extra 18% tax. So these are certain occasions where you might have to separate your supplies of goods and services to come out of the ambit of works contract or out of the ambit of higher rate of tax and something like that. So that is still possible. People have been doing it earlier also, even now also, and you can definitely legally do it. There is no issue. But the only thing is, as I said, it has to be structured properly so that it can pass the test of the law. Now, immovable property, yes, one point I was just trying to make, that is regarding immovable property. Since the works contract is now related to immovable property, now what is immovable property? That is of essence. So the solar module people, solar power plant people, when they came to me in the beginning of GST, in 2017 only, so they said that why should it be 18% because ye to, and do you know how the solar plant is installed and how does it operate? It is solar modules are there, so solar modules make, or cells make modules or modules make cells, something like that. So let's say 20 solar cells taken together, it makes a module. And let's say 20 modules, I am taking it in a very layman's language, I am not a very technical person. So 20 modules together, they will be put on some angles, steel angles, that will form a particular, in a particular shape, particular, you can call it a device or tool, something like that. And this way, in a series of that kind of systems, it will be installed in a very large area and all will be connected through wires. And this connection, so for this, the entire system has to be installed on simply some steel angles. So steel angle, say suppose one steel angle has, let's say like this. So if it is, let's say 2 feet and the bottom is, let's say 5 feet. So it is installed, embedded into the earth 4 feet. 1 feet is higher and then on that, in this fashion, all these angles will be put and on that the entire solar plates or solar system will be installed and it will be connected through wires. So they said that is it movable or immovable? Now what is your idea? Should it be treated as movable or immovable? Once it is installed, it is immovable. Now see, since time is very short, I wanted to show you in case of Sirpur paper mill. Earlier, 30 years back in 1999, 25 years back or something. In case, 1997, Sirpur paper mills, this matter went up to Supreme Court in the context of central excise. What they were doing, they were putting up a paper mill. And if any one of you has seen a paper mill, it's a huge plant. It's a huge continuous process plant. And suppose the length of the plant, there is a mill, that mill is installed on a very elevated platform and that elevated platform is very heavy platform, civil structure. That civil structure will be made, let's say maybe 10 feet deep into the earth, it will be embedded and 10 feet above, and on that a continuous process plant mill will be set up. That mill will be, let's say 100 meters or 50 meters long So that plant, it cannot be manufactured in a factory and carried. So it has to be fabricated and installed at the site only. So the contractors were engaged for fabrication and installation of the plant at site only. And why it is embedded into earth? Because it will run in a very high speed. So that will create vibrations. So to avoid that vibrations, the foundation is very heavy. That was the kind of structure they were making, and the department said that you pay central excise duty. They said we will not pay central excise duty. Why we will not pay? Because we said that central excise duty is payable on what? It is not payable on manufacture of goods. Now what is goods? Supreme Court has laid down the principle saying that goods means something which is movable and marketable. So it has to be movable. If it is immovable, it cannot be called goods. So only if it is movable, then only it is good, and then only central excise duty is payable. So they said that it is movable, immovable, so you cannot charge duty on that. Supreme Court said that it is movable. Supreme Court said that it is movable and you have to pay duty on that. Why? So Supreme Court said that, you see, you have embedded it into earth only to increase the operational efficiency, only to avoid the vibrations. But it can be dismantled and taken to some other site and again reinstall. So that is why I will treat it as movable. So that was the Supreme Court judgment in 1997. But subsequently, in Triveni Engineering, Supreme Court, they did not reverse, but they distinguished from seal-proof paper mills, and then there they said that no, if it is permanently attached to earth, then it should be treated as immovable. If it is constructed or erected like a building or like a tree, building means brick by brick you are constructing. So demolition of a building and taking some salvage bricks to some other side, that will not suffice. So if it is set up just by nut and bolts, if you can unscrew those nuts and bolts and then take it to some other side, then only it can be called movable. So if it is permanently fastened to the earth, so then subsequently following Triveni Engineering, there are a series of judgments where it is said that if it is intended to be permanently fastened to the earth, that means there is no intention to make it, keep it movable, portable. It is to fix it to the earth only for a reasonable period, for its lifetime or something like that. Then it will be treated as immovable. So now to great extent it is resolved, but this fine line of or the principle of law is not yet settled. Still there are controversies on it. So that is why in case of that solar plant case, we said that, sir, it can be treated, very well treated as immovable, because you are permanently affixing to the earth. It is not that Delhi or 6 mahine yahan rakha, 6 mahine aur kahin le gaya. It's not possible like that. And since you are making it by cell modules, then module by module, then that system and then entire is laid down in a particular fashion with some engineering there, also some electrical engineering and so many mechanical engineering and so many other aspects are there. So the entire plant or the entire system has to be in a particular fashion, desired fashion, otherwise it will not operate. So that is permanently going to be there and installed, embedded into the earth, so it should be treated as immovable. But this fine line of distinction is still not resolved. But nevertheless, that is the basic principle so far being followed for the time being. So keeping that in mind, accordingly we need to decide whether it is movable or immovable. And if it is immovable, then it can be treated as works contract. If it is not immovable, then it may be other than works contract. So in case of other than works contract, there are other principles to be followed. So friends, this was the basic few points. Sorry sir? Credit? हाँ, credit में क्या बोलने? हाँ, as far as credit is concerned, you know that 17.5 there is block credit, list of block credit. So there it is said that if you take any inward supply, because the basic principle or the basic framework of input tax credit today is, if you are a supplier of any goods or services or combination, whatever it may be, which is taxable, then you can claim credit of any inward supply, credit of tax paid on any inward supply which is used in the course or furtherance of business. So for that matter, that means any inward supply is eligible for input tax credit, but 17.5 says that there are certain items on which credit is blocked. That means you cannot claim a credit. And there you will find that construction of a immovable property, construction of a building particularly, that is ineligible for credit. So construction of an immovable property, construction of a building, correct. So any goods received or any supplies received or services received for the purpose of construction, that will be ineligible for input tax credit except plant and machinery. That means when you are receiving any goods or services for plant and machineries, even if it is immovable, still it will be eligible. So for that matter, what happens? That means when you are engaging a contractor for construction or erection of a plant and machinery like that paper mill or something like that, although it is immovable, but still input tax credit will be available. As long as that supplies of goods or services are in relation to construction, fabrication, erection of that plant and machineries, including the civil structure. So civil structure which is going into the foundation or support structure, like as I said, that elevated platform will be needed, concrete ka, on that mill is to be installed. So that entire amount will be eligible for input tax credit. But suppose you are making an office building in your factory, suppose you are making a godown in your factory, those will not be eligible for input tax credit. So that means what? Then how to do structure your contract again? So when you are giving a contract or finalizing a contract or structuring a contract, you should look at the total kitna kaam involved and pura plant ka turn ki basis pe dena to बेवकूफ़ी हो जाएगा. So maybe I would give him separate contract values for office building, for godowns and for civil structure, for foundation, etc. So that foundation wala input tax credit I can claim, and for the building and for the godown, etc. since it is not eligible, so I will not claim. So that accounting, documentation, billing, everything should be identified since beginning. And this is the same concept you can follow even in respect of that interior contract also, as I was saying. In respect of interior also, you cannot simply say that interior means everything is eligible or interior means everything is ineligible. If it is in relation to construction, so the part, let's say laying of tiles or marbles, etc., that becomes a part and parcel of your building, so that may be ineligible. But suppose you are making some cabinets, if you are making modular cabinets or modular tables or chairs, those things will be eligible. So accordingly, even the contract, interior contract also can be designed that way, to take care that yes, you don't lose on account of input tax credit too much. So considering all these aspects, and friends, last, maybe it's very important, although time is already up, maybe I can take another 2 minutes. Very important aspect I would like to share with you, that is, today in the scenario of GST, if you are engaged into a works contract, suppose works contract means contract for immovable property, construction of immovable property. Let's say you have got a contract for construction of roads, and that contract you have got for construction of road in West Bengal. And you are somewhere, or let's say you are in West Bengal, but you have got a contract for construction of road in Bihar. So how do you do that? What would you charge? Whether you would charge IGST or CGST as GST? So that means you are here, location of supplier is West Bengal, place of supply is Bihar. So first of all, place of supply is the place where the immovable property is being constructed. That is very clear. And you are here, location of supplier is here, that means, so you will be charging IGST, correct? If you are charging IGST, fine, the tax will go to Bihar, right? And since it is a road contract, maybe you have got it from NHAI or from PWD, etc., anything. So since they are not registered in GST, or even if registered, they will not get any input tax rate in respect of this, correct? But the tax has to go to Bihar. And say, for this contract, you have engaged another subcontractor from Jharkhand. What he will do? What the Jharkhand contractor will do? Yes. He will charge you CGST as GST. So when CGST as GST is chargeable and when IGST is tax, when you charge CGST as GST, when you charge IGST. IGST. So the Jharkhand contractor will charge me I or CS? I. And I will charge I. Should I get credit of this? Huh? See, it's a very interesting point to note. You are right that for Jharkhand contractor also it will be IGST, I. Because, see, whether it will be C or I depending on location of supplier and place of supply. Mind, if these are in two different states, it will be I. If both are in same states, it will be C plus S. So, location of supplier here is Jharkhand. What is the place of supply for him? For both, the place of supply is Bihar. Because the place where the immovable property is being constructed, that is Bihar. So, place of supply is Bihar, whether for Jharkhand or for me. Correct? So, he is the supplier from Jharkhand, place of supply is Bihar. So, he is charging IGST, he is billing me. I am in West Bengal. How do I claim credit of that? But how do I claim input tax credit? See, when you charge I, please mind you, look at your bills. Look at your format of tax invoice. In the tax invoice, you have to mention what is the place of supply. So when the Jharkhand contractor, subcontractor will bill me, maybe he is billing me, but there he will charge IGST, but the place of supply is Bihar. So number one, he has to mention that the place of supply is Bihar. And if the place of supply is Bihar, and even if he is charging me and he is charging IGST, I may not get the input tax credit. Number one. Correct? And therefore, even if he has charged IGST, I may not get that input tax credit. So if I again raise my tax invoice, again I will be charging IGST in place of supply Bihar, I will be paying tax. So that tax will also go to Bihar. So that means double taxation will be there. So how do you take care of that? Yes, that's the only solution, that you take registration wherever you are doing the contract. See, since sales tax regime, since service tax regime, you have been doing that. The contractors have always been doing that. Now that in GST, because of some controversies, because of some divergent views on different aspects, since I don't have sufficient time now, I am not in a position to discuss all these in detail, but those advices are at times becoming misleading. Because now in GST, the scenario is totally different. Since it is a state and central both, and the revenue of states are involved, and there is a mechanism how the tax will flow from one state to another. So that is making this procedure a little strict. You have to strictly follow that. So to ensure that flow, you have to get registered in the place where it's advisable to get registered in the place where, irrespective of other controversies, whether at all registration is required as per law or not, but you can definitely take it voluntarily, there is no issue. And once you take that registration in Bihar, when any party doing the work, he can raise bill on you, you can claim that input tax credit and you can pass it on. Otherwise, there are some cases we have been handling live where people have done such mistakes. They have claimed, let's say, in one case, that Jharkhand has charged IGST to me in West Bengal. I have charged IGST to the party in Bihar, and the NHI may be in Bihar. But what I have done, I have claimed input tax credit. Now, and the subcontractor, he has not even mentioned the place of supply in his invoice. And even in return also, he should have mentioned that, he has not mentioned. Quite often we are finding that there are deficiencies in such kind of filing of returns, etc. Because of which the tax is not flowing to Bihar. Because the place of supply is not mentioned, so where the tax will go? Since it is IGST, so their internal mechanism says that when such kind of tax is going to such suspense account, it is accumulated, not attributable to any state, then it is kept with them, and subsequently it is being, this is not from the law, this is from my personal knowledge I am saying, that then that amount is being distributed to all the states proportionately. So finally, actually the amount which should have gone to Bihar, that amount is not going to them. Maybe hardly 5% of that going to Bihar as a proportion. So that is why they will not allow you any credit. So the West Bengal party is also not getting any credit, and West Bengal party, while charging IGST, he is also, so both the parties are in default actually. Both the parties are facing notices and demands from the department. So that's a very big problem. So especially in respect of works contract or EPC contracts, the place of supply aspect, the billing, registration, this is very important. Apart from other discussions, whatever we have. see here, build to shift to concept may not suffice because of other reasons. So it's simply the best solution is that people get registration there itself and they get the bills accordingly. Yes, sir.
Now at that time he takes a registration in Bihar to avail the credit and discharge his liabilities. Suppose this transaction is in from July 19 till March 20. His contract is over, now he no more needs the registration. After 20 he discharges liability and cancels the registration. Now again after 2 years he again gets a Bihar contract. Will he be able to apply again registration and will be number will be different or same number?
No, different.
So he is allowed for multiple numbers in the different years.
It's number one, multiple numbers, even simultaneously also it is allowed, but this is not a simultaneous multiple numbers. No? What you are talking about is for a period he was registered, then he got deregistered, then after some period he is again going for registration. That is allowed, no issue.
And suppose if audit happens for his previous registration and it is found that he needs to pay some ITC. Now already he has given up his previous registration, but in his current registration he has ITC. Will he be able to set off that ITC requirement?
No. There is no mechanism like that.
Okay, sir.
Either that ITC has lapsed or maybe he has transferred to his head office or something like that. That can be done.
But how can he transfer from Bihar to head office his ITC that is available?
While deregistering, that is possible.
That is possible.
That is possible.
Thank you. That will help me.
That will. Subsequent registration is very good. Thank you, friends. Thank you. Sorry. MEP means what is the full form of MEP? Mechanical engineering and right. You will not get any credit. You will not get any credit. That is what we discussed. That if you have a single contract for immovable property and maybe some movables as well, since that is all clubbed together, you will not get any credit. That is what we discussed so far. Na? That looking at which item is eligible, which item is ineligible, accordingly if you can structure your contract and accordingly if you can give your contract to contractors, then that can be done. Independent, correct, absolutely. No, not difficult, it's not difficult. It's only that it has to be correctly done. It's not difficult. It needs to be done correctly, properly. Thank you very much, friends, for giving me a patient hearing. Thank you.
Thank you, Mr. Agarwal. Now we present a memento to Mr. Agarwal on behalf of Bengal Chamber. We will have a lunch break. We will resume the next session from 2:30. So lunch will be served at the Bengal Lounge, 3rd level. There is a lift and at the right-hand side. I now request Mr. M.S. Mani, who is the co-chairperson of the Indirect Taxes Committee of the Bengal Chamber of Commerce and Industry, to take the session forward.
Thank you, Shorguni. It is a pleasure to be here after 2 years or so, because 2 years we have not done any physical sessions. And at some point of time, virtual world was becoming very, very boring, because the entire day you keep seeing people's faces on screen, and you start thinking that it would be far better to stand across and do that. We were hoping that would get over somewhere in November, but then again we had Omicron, which started. So finally, it is good that we are over here with, relatively smaller audience. When we were planning the session, what occurred to us was basic aspects of GST in terms of how GST is, what has happened, etc. Most of us know. So over the last, GST is now going to become a 5-year-old child. So over the last 4.5 years, most basic things on GST are largely settled, most people are aware. And therefore we said, let us focus on a few sectors in terms of what is the GST impact on those sectors. That is why you would have been seeing sessions in the morning, which are all sector-wise.
So I propose to discuss real estate and hospitality services. But before doing that, how many of us over here are involved in real estate business? How many of us work in real estate companies, own real estate companies? One, yes, I can see. So there's only one person who is from the real estate sector. Okay, how many of us are from the hospitality sector? Okay, so again we have one person from the hospitality sector. And the rest of you can just enrich your knowledge in terms of hospitality real estate, because even if you're not part of that sector, the GST implications will impact you in whichever business you are in, and especially hospitality will impact everybody. So let us get started. We are, I guess, a little behind time. So we'll try to make up for time so that when Mr. Pulok Shah comes, he doesn't have to wait for too long. So what we will do is to go through some of the aspects of real estate sector as we understand. Real estate is a very, very critical sector for GST especially, because large part of the GST collections come from the real estate sector. Real estate is also very, very important because it is an extremely employment intensive sector. And for a country like us, it is very, very critical that real estate sector does overall, well. So when we look at real estate sector, what we have to bear in mind is that we have to at any point of time consider how the real estate sector was pre-GST and in post-GST. In post-GST, there are two periods up to March 19 and from April 19 onwards. So unless we have these three things at the back of our mind, anything that we do on real estate typically sometimes does not make sense because we feel there is no logic to it. So pre-GST in real estate sector, we used to have a service tax and we used to have a VAT, and both were applicable at various points of time. So construction of residential and commercial complexes, the rate was 4.5%. Service portion on execution of works contract was 15%. In case of original works was 6%, and in some cases 15 minus 4.5, the abated rate was 10.5%. So this was the prevailing position prior to GST in respect of service tax. In addition to the service tax, there was also a VAT that was levied by each state differently. All that led to cascading in addition to other difficulties. Once GST started, what we started seeing in the initial period up to 2019 on the real estate sector was we had a multiplicity of rates. So we had an 8% for affordable housing, 12% for non-affordable housing. In certain cases, the distinction between commercial and residential goes away. I would say all this was pre-pandemic. Post-pandemic, the distinction between commercial and residential has completely gone away because all our residences have got converted to our offices in the process of working from home. But this is not considering that. This is considering a normal case where a person uses a residential apartment also for commercial purposes. If the GST authorities want, on a lighter note, they can actually go and attach my house because I have not paid GST, because I have been using 50% of my house for commercial purposes for the last 2 years. And it's less than 50% which is being used for residential purposes. So consequently, when a builder sells an apartment in future, he has to be very cautious of this 15% of total carpet area. Over the last 6 months or so, when second wave ended and before third wave began, quite a few of the large real estate associations have also lobbied for changing the 15%. Because 15% is a very small space for anybody to work, and work from home and work from anywhere is now a reality. It's not going to go away after the pandemic. Most organizations have already reduced their area. Most people don't want people to come to offices every day. And therefore, the 15% cap has to go away at some point of time and become a more reasonable level of say 30% or 40%. Fortunately, in April 2019, the real estate rates were made very, very sensible. Now, when I say sensible, I am looking at it from the perspective that existed previously to the perspective that came subsequently. That is the context in sensible. Would the real estate sector be happy about it? They are not happy about it. Similar to when we come to hospitality, I will discuss restaurants. So are restaurants happy about it? They are now not happy about it. But if you look at the chart which is there before you, and if you look at all normal apartments other than affordable housing, 12% to 5% was a major reduction. And the reduction was made on the premise that there would be no input tax credit that would be eligible in respect of 5%. For the new tax rates, which are the 1% for affordable housing and 5% for others, there are a few conditions that have to be fulfilled. The first condition is that the tax has to be paid through cash only. It is not permitted to use any form of ITC for payment of that. The second is that any installments which were due after 1st April 2019, when the changes came into force, the ITC attributable has to be reversed, because if there is no output tax collection, there is no input tax credit eligibility as well. 80% of the value of the input and input services received have to be from registered dealers. They cannot be from unregistered dealers. Now here, fortunately, they have excluded items like TDR, long-term lease, electricity, motor spirit, etc., because those cannot come from registered suppliers only. There is a project-wise account of the inward supplies which is required to be maintained. So a builder or a developer may have one GSTN, but he cannot get all the inputs under that GSTN and use the inputs freely across various projects that he has got, because some projects may be for affordable, some projects may be for the normal housing, some projects may be residential cum commercial, some may be full commercial only, and therefore there is a need for a project-wise account of the inward supplies, which is required to be maintained for purchases from registered suppliers and unregistered suppliers. So at the first level is project, under that project registered supplier purchases, unregistered supplier purchases has to be maintained separately. And any tax liability due to the shortfall on the inward supplies from unregistered dealers, because essentially the lower rates were given on the understanding that real estate sector would make all its input supplies from registered dealers only. And only a 20% cushion was given for unregistered dealer, because the objective of GST is to get everybody into the GST ecosystem. Everybody should have a GST number and everybody should be paying their taxes, or at least filing a return if there is no tax liability. That is the purpose. So if a real estate builder developer purchases from unregistered businesses, the tax liability on shortfall of the inward supplies has to be added to his output tax liability. There are certain transactions which are not regarded as supply. So as all of us are aware, GST is payable on supplies, and if there is a sale of land, in that case, it is not treated as a supply. So sale of land is outside. Equally, sale of buildings or civil structures before they are completed, meaning before completion certificate is issued, would also not be subjected to GST. We'll resume after he is done with his call. Are you done? Can we resume? Now here, when we talk of completion certificate or first occupation, we need to be clear that the term first occupation completion is used interchangeably in the GST law. So completion certificate is used in different contexts in different states and different municipal authorities. So some places have got an initial completion certificate and final completion certificate. Some places call it building occupation certificate. In some places they say occupancy certificate. But whatever be the nomenclature given to the completion certificate, if an apartment is sold after obtaining completion certificate, it is a sale of an immobile asset and therefore does not attract GST. First occupation is also a relevant context that has been defined in the GST schedule itself. This is very important because in many cities, in places like Bombay, for example, one way of avoiding GST is never to have a completion certificate for the building. So if you don't get a completion certificate ever for a building, the only challenge is someday if you have to sell the apartment, you will struggle to sell the apartment because it can't be registered before completion certificate. But in many cases, people don't want a completion certificate, and therefore the concept of first occupation was introduced. Now, first occupation may be illegal in respect of certain other legislation. But as far as the GST law is concerned, it says that the first occupation is in terms of the laws, regulations of that state or that municipal body. That is termed as first occupation. In terms of ITC reversal, the position up to 2019 and the position after 2019 is completely different. For the period up to 2019, the need to reverse ITC was in respect of the turnover achieved in a particular financial year. Whereas in respect of April 2019 onwards, this is on a project basis for a particular real estate builder or developer. There is also now a need to pay reverse charge on certain types of transactions. So if there is a procurement from an unregistered dealer other than TDR, FSI and long-term lease, which constitutes a shortfall of 80%, the promoter or developer has to pay a reverse charge on the basis that he is a supplier. Similarly, cement, which is one of the key raw materials, to the extent that constitutes the shortfall of 80%, there is a need to pay reverse charge. If there are any capital goods procured from an unregistered person, again, there is a need to pay a reverse charge. Services supplied by way of transfer of development rights and long-term lease of land I mentioned. So in these cases also, there is a need to pay a reverse charge. So what the reverse charge applicability here seeks to do is to ensure that at all points of time, the tax authorities are aware on who is the supplier. So if the supplier does not declare it in his return, the promoter or developer who buys it is disclosing it in his return so that the tax authorities can go to the supplier and demand tax on other transactions as well. For real estate, the value of the land is very, very critical. And at various points of time in various cities, people have taken various measures as to how land is valued. Now, unfortunately, there is no common parameter for valuing land. The GST law says it will be one third of the amount charged, which means 33%. Now, is 33% standard or non-standard is very difficult to say. So, in a place like Bombay, the cost of the land in terms of a project will constitute roughly 60 to 65% of the total project cost, because land cost is huge. But maybe in some rural areas or maybe in some outlying areas, the cost of land may be 20% also. So here there is no definitive norm, but there is a deeming provision with respect to the value of the land. Bear in mind that now there is no option available to the promoter or developer to deduct the actual cost of the land. So they can only deduct 1/3 of the cost without any indexation. So it is only 1/3 of the project that is termed to be attributable to the land. The rest is attributable to the construction services that are being provided. There are various situations where the promoter may enter into one agreement for sale of land with a group of 25 people. The 25 people subsequently transfer the land back to the promoter, and then the promoter gets into a construction contract for them. Even in those cases, this principle largely applies. That is what has been stated in one of the recent AARs. When there is a transfer of a development right, a floor space index purchase or a long-term lease, between the landowner and developer, the transaction which is there is subject to an exemption provided the constructed residential apartment is sold before issuance of completed certificate. So if there is a transfer of development right involved in a transaction, and if the landowner wishes to avoid paying GST on that, it is the landowner's responsibility to ensure that the developer sells the residential apartment before issuance of completion certificate. So if basing on that TDR, the developer builds an apartment complex and sells all apartments after issuance of completion certificates, then there is no GST revenue at all. And if the flats are sold after issuance of completion certificates, the exemption given to the landowner can also be withdrawn. I have just put together a chart. Some of you may be interested, some of you may not be interested. You can refer to it when the slide deck is subsequently shared with you. This is to just help you in understanding the TDR, FSI and long-term lease implications in respect of residential projects, commercial projects and mixed-use projects. What is the value and what is the time of supply? GST law also has got a concept of tolerating an act or situation. Some of you will remember in service tax law, we had a section 66E, which spoke about some of these characteristics, but these were not specifically articulated the way we have put it over here. So in the GST law, the situations of tolerating an act, the schedule relating to that, is equally applicable to real estate supplies. And after the 2019 change in the GST rates, quite a few people felt that it was as long as they pay a 1% or 5% as applicable, and they are not entitled to input tax credit, and they buy 80% or more from registered dealers, there was nothing else to be done. That is not so. So there are various situations in which there could be an 18% GST also. Tolerating an act or situation is one of them. So if the builder or developer levies any cancellation charges on an apartment where he originally charged 5%, then on the cancellation charges he will not pay 5%, he will pay 18%. And subsequently when he resells that apartment to somebody, he will charge 5% again to someone else. Equally, if he levies any penalty for a breach of contract, or if the buyer of the apartment has given an advance and the builder or developer does not return that advance on cancellation, the builder developer is required to charge 18% on that value. He cannot charge 5% on that. Check bouncing charges and notice pay also in many cases attracts 18%. There are just 2 or 3 decisions that I picked up in the context of real estate services. One is in case of Alembic, which again was in respect of a long-term project which started in 2010, completed 7 years and then was continuing during the GST period also. And the question over here was that the credit that was taken by them from 2010 to 17, is that required to be reversed in the post-GST period? And in this case, the Gujarat High Court said very clearly that they are not required to reverse any credit during the period of 2010 till they obtain the completion certificate. PPD living spaces is also a very good decision of the Kerala AAR, where the issue was in respect of the completion certificate of the project, which was issued in May 2018. Now, the proposed transaction that they sought a question was in respect of sale of developed plots and civil structures after May 2018. What they said is that the sale deed executed for the plot as well as the undivided common areas attracts only stamp duty and registration charges, and there is no GST at all, because the completion certificate was issued first and the proposed transaction happened subsequent to that. This is again a good decision of Dipesh Kumar, Anil Kumar Nayak, where the question was if there is a sale of a developed plot. Now, a developed plot means without a building. So, there is no construction which has happened on the developed plot. The developed plot has only got a water line, telephone line, garden, common areas, etc. There is no building which has come up. Would a sale of a developed plot be treated as construction of a complex, which is what the GST law defines? And the answer over here was a developed plot is also covered by the meaning of the term construction of a complex intended for sale to a buyer. And therefore, they said that when you have a developed plot which is being sold, on that also GST is applicable, although there is no building that is built on that plot. Finally, this is Mark Spaces, which is fairly recent decision. Here, the question was that the primary purpose of the joint development agreement was actually to develop the land and subsequently share the revenues earned from the sale of the land and plot. And therefore, they said that this is not a sale of a land, but it is a sale with an obligation to develop that land and construct something on it. Consequently, this view which they took, which was again relying on Vidit builders also, they said that the development of the land was intended to have a subsequent construction on that land, and therefore it attracted GST. So, any questions on real estate, or we can move to hospitality? But any questions, any thoughts? Let's move on to hospitality. Hospitality is again something which, even if we are not engaged in that business, most of us interact with it on a day-to-day basis. There would be hardly anybody who does not interact with a hospitality service provider in some form or the other. This again, similar to real estate, is a significantly employment-intensive industry and therefore is of critical importance for the government and for the country. Prior to October 2019, the hospitality industry generally attracted, before October 19, they generally attracted a GST rate of 18%. But with the 18%, there was also complete freedom to take input tax credit. There was no restriction on input tax credit. This led to a lot of furor on an 18% being levied on a hospitality, because the feeling was at that point of time, some of you may remember, I don't know whether I've got that slide here, some of you may remember a leading celebrity tweeting a picture of a bill of some 2 bananas he had in some 5-star hotel. And Raju, let me see if I have that. Mr. Rahul Bose. Yeah, I have it here. So this led to a bit of a furor. And the questions here were, first was, banana is a fruit, so does it attract GST? And the answer is no, fruits don't attract GST, vegetables don't attract GST. So how can a 5-star hotel charge a GST on, bananas? They said, look, as far as we are concerned, it is food. If we don't charge it, we'll be caught, so we have to charge it. The next question was, isn't 18% too much to be charged on 2 bananas? So that led to a lot of, so I believe this tweet was one of the reasons, among many other reasons. The industry was also lobbying with the government for a reduced rate. But this was one reason why at some point of time they had to relook at the GST rates and they had to bring it down to a reasonable level. So what they did is brought down the GST, the standard rate of GST, to 5%. But with that they also said that there is no availability of ITC. Now, when the industry was lobbying for a reduction of rates, one of the statements that the industry had made to the government was all the restaurant owners associations, they have got 3 large all India bodies. So all the 3 bodies had said that, look, for us ITC does not matter, because for a restaurant, what are the inputs that they get? It is food grains, it is fruit, it is vegetable, it is milk, etc. Those are their inputs. Those inputs don't come with GST. So they said, when you say that GST is very good because people are getting more ITC, it's not applicable to restaurants because we hardly get any ITC. Now, basis this representation which the government had in October 19, they reduced it to 5%. And they said, since the restaurant industry has largely said that they are not interested in ITC and their inputs don't suffer GST, there is no ITC. But subsequent to this change, within some 3 months, the restaurant industry again went back and started saying, look, we want 5%, but we want ITC. Now, the category of restaurants and the category of service providers who went and wanted, who really have a genuine problem because of this, are the large food outlets. The McDonald's, the Pizza Huts, the Domino's, the mainland China, the Sigri of the world. Because most of these places operate on a franchisee model. And on the franchise fees that they pay, which is a significant amount of their top line, they have to pay GST. So the GST charged by the person who is giving them the franchise rights for that outlet is coming to them at 18%. That's a large item of expense for them. On that item of expense, the fact that they can't get input tax credit is severely impacting their business. So the present thinking on this, which quite a few people have petitioned also, is to say, can we have two systems for restaurants? Restaurants which want to pay 5% will not get ITC. Many other restaurants may be willing to pay 12% with ITC. Can they be permitted? So, in future, I think all of us should be prepared that the cost of pizzas and burgers is going to go up. Maybe 3 months, maybe 6 months, but that is certainly going to go up because that segment is really significantly impacted by the denial of input tax credit. For composition dealers and non-composition dealers in this business, it does not matter at all. Because earlier, if before October 19, if the restaurant was below the threshold, they could opt for composition scheme. Now, whether you opt for composition scheme or whether you opt for normal scheme, in both input tax credit is not applicable. In both the rate is 5%. So the threshold exemption hardly matters for this business now. This is a very interesting amendment which is very recent. It has come into force from January 2022 only. And this has made food services through Swiggy and Zomato a little more expensive than what it was before. Now this again, whether it is fair, whether it is consumer centric is a different debate. We are only discussing it from a GST standpoint. So the amendment that has been made from January 22 is that a restaurant services which are provided through an e-commerce operator, which is a Swiggy and Zomato, will be liable to GST under reverse charge mechanism. So it is Swiggy and Zomato which will have to charge GST, collect GST and pay that to the government, not the restaurant owner. But a 3-line change in the GST law, what are the issues that leads to? This is one of the examples. So this has led to multiple issues. First issue being, many of the restaurants where Swiggy and Zomato operate, where they pick up food and deliver, many of those restaurants are below the GST threshold itself. They are not large places. The taxable turnover is below the threshold. So in a normal situation, when somebody goes and eats in that restaurant, the person would not be charged GST. There would be a certificate which says composition dealer registration number this. In certain cases, it would not have a GST number at all because they are below the threshold. So now there will be a differentiation between a restaurant which is below the GST threshold. You go and eat there, it is 5% cheaper. You order the same food through Swiggy, Zomato, 5% more expensive, in addition to the delivery charges of Swiggy and Zomato. Right? Now, this was certainly an unintended consequence. It was definitely not an intended consequence. So, effectively, the moment a restaurant ties up with Swiggy, Zomato for deliveries, what it means, they are under the radar of the GST authorities. In the past, GST authorities may not even have known there is such a restaurant. Now they know that through the database that they collect. This is one unintended consequence. Other unintended consequence of this small, change that they have made, for a restaurant which is liable to pay GST at 5% on all its supplies, above threshold, above composition, etc. One very simple way of their not paying the required GST is to show it as a sale through Swiggy Zomato platform. So when they disclose their taxable turnover for a restaurant, there are two columns that they have to fill up in their return. Sale through e-commerce operator, sale directly. If they inflate the sale through e-commerce operator, they don't have to pay the GST. And by the time the reconciliation happens, there will be a reconciliation which will happen at the back end. But by the time that happens, should take a year or two. So till that time, there is no mechanism to check whether the revenues reported by a restaurant on sale through e-commerce operator precisely matches with the sale reported by the e-commerce operator from that restaurant. So Swiggy, I am told, and Zomato had declared before their IPO also. So Zomato services 700,000 outlets in India. So there are 7 lakh outlets whose food delivery is picked up by Zomato. So which means somebody has to do a reconciliation of 7 lakh outlets, right? That they are these 7 lakh outlets paying the right amount of, GST. So this is again one more unintended consequence of this amendment which has, happened. More importantly, over here, when you order food through Swiggy and Zomato, what is the purpose from a consumer point of view? It is just the convenience. There is nothing other than convenience. It is just the convenience of being able to order, in the midst of a cricket match at 11:30 in the night. It is just a convenience. That convenience is now going to become very, very expensive. Now, Swiggy, Zomato, again, when I said Zomato services 700,000 outlets, they provide employment to 40,000 people. So it is again a very employment intensive sector. So if people start looking at the 5% GST and the delivery charges levied, and the total comes to, let's say, 10%, the intention may be to go out and eat, right? That's far cheaper. Because in any case, you get a food delivery at home, you got to open it, you got to put it on a plate and put the plates for washing, etc. So when you go and eat in a restaurant, you don't need to worry about anything. More important, this change came into effect from 1st January 22. So from 1st January 22, was the intention to make more people go out and eat, or for more people to get in and eat, which was safer from a health perspective? Safety health perspective determined that people should not go out. That was the mandate, given. Right? So all these are the unintended consequences of a 2-line change in the GST law. We also now in the F&B industry, we now have this concept of central kitchen. Now this did not exist until 4-5 years back. This used to earlier exist only for the airline food service providers. So all the airports outside would have a central kitchen which would supply food packets to the airlines. Excepting that, it didn't largely exist. But this has picked up like anything now all across. Now Zomato has its own central kitchen. Swiggy has its own central kitchen in certain parts for supplying few items, not all their items. Now when there is a central kitchen, the question over here is that many of the states, especially for example NCR, is a combination of 3 states. So if there is a food supply which happens from Gurgaon to Delhi, or Delhi to Noida, or Noida to Delhi, because real estate in Delhi is very expensive. So setting up a central kitchen in Delhi is virtually impossible for anybody. It's only possible, may not be even in Gurgaon, because Gurgaon is also very expensive. It's possible in Noida. And if somebody sets up a central kitchen in Noida and supplies food to Gurgaon and Delhi, what does that do as per GST law? As per GST law, that is an IGST supply. And therefore, although you are supplying to your own outlet, it is to a different registration number. Now, this again is an unintended consequence which has come into force from January 2022. We also have something similar on an unintended consequence in respect of a product that we all love. Most of you would have had that as dessert also today after the lunch. So we'll come to that in a minute. Now, ice creams work from ice cream parlors. Ice creams are also served like today in the Bengal Chamber, event. Ice creams also are served through restaurants. You can go to a restaurant and order an ice cream as a dessert. So they have got these three models of service. Now, normally, ice cream attracts 18% GST. So when you go to a shop and buy ice cream, it's an 18% GST cost which is embedded in that. Now the question over here is, earlier an ice cream parlor was treated as very similar to a restaurant. It was a restaurant for all practical purposes, which could be called a ice cream restaurant or a dessert restaurant, because they only supply ice cream. So ice cream parlors in the past were all paying 5% GST. After the change that we saw recently, ice cream parlors now have to pay 18% GST. So when there is an ice cream company which supplies ice cream to an ice cream parlor, then that ice cream parlor supplies onwards to a customer, they end up paying 18% GST now. Now, why do they have to pay 18% GST? Essentially, because when an ice cream parlor is selling a product, it is selling a manufactured product. So an ice cream parlor today is treated more as a trader in goods rather than a service provider like a restaurant. Now conventionally, is an ice cream parlor like a shop where you go to buy pen, paper, pencil, or is an ice cream parlor like a restaurant service outlet? I'm not sure based on this. Because this says people go to an ice cream parlor the way they go to a shop to buy pen, paper, pencil, stationery, soap, toothpaste, etc. Similarly, people go to an ice cream parlor. Many other people would think that people go to an ice cream parlor similar to a restaurant. You want to grab a bite, you are hungry, let's go and have an ice cream. So it's an alternative to a restaurant, but the 45th GST Council meeting felt that is not correct. So they said ice cream parlors should also now pay 18% GST. This we just spoke. It's a very famous person. Okay. Now, hotel and accommodation services. So there are three slabs: nil, 12%, 18%, depending on the tariff. Here we have to bear in mind that when we have slabs for anything in GST or earlier in excise or service tax, we will always have a lot of people who operate at 1% below that slab. So this classification of 7,500 below and 7,500 above has led to a lot of the travel booking sites. So if you check Ease My Trip, Make My Trip, Booking.com, anything, you'll find many hotels offering a tariff of 7,400. Several of them. So I'm not sure what is the sanctity of 7,400, because from GST law, 7,400 and 500 are very different. So 7,400 is a new slab that has been created because of GST. The good part of this is they have clarified and said that the tariff, if it includes a breakfast or any other additional services, then that is also included in the GST tariff. So if somebody offers a 7,400 room night with breakfast, with 4 pieces of laundry and airport pickup, there is no additional charge for those, then the 7,400 will still attract 12% only. It won't attract anything more. Construction of hotels is similar to a works contract service that Mr. Agarwal had discussed in the earlier session. The key challenge over here is that when a hotel business constructs a hotel, it constructs it through a contractor. And therefore, the EPC contractor who is involved in building the hotel has to be very cautious to ensure that there is no input tax credit loss. Can a hotel owner directly take credit if he builds a hotel himself? Answer is he cannot. Because his output service is hospitality service and the input tax credit is on cement, steel, etc., which does not have a linkage with the output. But the way forward which somebody could consider is in case of safari retreats, Orissa High Court said that when you build a shopping mall and then you give the mall on rentals to various people, you don't sell units in that mall, you give it on rent. The rent attracts an 18% GST, and therefore on the inputs and others also you are permitted to take input tax credit. So that is where the inputs and outputs have a close correlation. This is a very big challenge for the hospitality industry again, because people travel and large part of the travel is business travel. Now in business travel, it is not possible that anybody who goes to another state will not stay in that state because he says, look, ITC nahi milega. That doesn't work. So when people go and stay in any other state, in a hotel in any other state, the ITC is denied. Not for any reason, it is denied because as per the law, it is not eligible. Now, even in many cases, if you have an office in that particular state, even then you will not be able to take a credit because what they do is to check whether the employee is employed in that office or any other office. Because the theory the GST authorities have over here is, if you have an office in Kolkata, why would your employees go and stay in a hotel in Kolkata? Now, I can think of many reasons why employees may want to go and still want to go and stay in a hotel in Kolkata. There can be many reasons. They may have got bored, it may be an incentive, it may not be safe, office may be under renovation. There can be several reasons why people may want to go and stay. But as per the GST law, that is permitted only if the bona fides of the transaction are proven. Otherwise, for interstate travel, there is no ITC that is permitted. Finally, on travel and tourism services, the GST on this is fairly simple. So that is the reason why I have used various arrows to indicate where things stand. The commission incentive that is earned from the airlines on a domestic ticket, GST is levied at 18% on 5% of the basic fare. And in case of international tickets, it is 10% of the basic fare. So to that extent, it is simple. But if there are any processing fees charged from the air traveler by the airline, in that case, there is a GST at 18% payable on it. So if you book a flight from any of the travel operators on Indigo or SpiceJet or anywhere, you will always see 2 or 3 categories of GST on your invoice. The first thing you will notice is that as soon as you book the ticket, you don't get the invoice. The invoice will come to you after 3 hours or 8 hours or next day. And when it comes, there will be various line items of GST because they have to do the segregation on 18% on some and 5% on some. Finally, on outbound and inbound tour packages, which are called group tours, which are run by various companies, Thomas Cook and Kesari and Mercury and everybody. If the tour fee is charged on a principal basis, which means if Thomas Cook is conducting a tour and taking people on a tour, they are doing it on a principal basis. Then GST is charged on 5% without ITC. So on the total value, there is a flat 5% which is charged. But if the tour is charged on a commission basis, which means Thomas Cook has franchisees, and those franchisees are going and booking that tour as an agent of Thomas Cook. In that case, on the amount the agent charges, on that there is an 18%. Similarly, in respect of inbound, there is a need to charge 5% or 18% depending on whether it is on commission basis or it is on principal basis. So, Sharbani, I think we are on time. So, any questions, any thoughts? I am happy to take a few questions if in case anyone has any doubts, although I realize there are only 2 people in the sectors that we discussed today. Yeah. Please sit and, so I am the only person who will stand. Go ahead.
So, sir, you briefly spoke about the concept of ice creams being sold from restaurants since they are cooked. They would not be treated as a restaurant service. So, would the same logic apply to a bakery or a patisserie who is selling, say, cooked items like cakes and pastries, etc., from their outlet? Are they free to charge 18%, or can they go in for the restaurant model and charge 5%?
They have to charge 18%. They are not, they don't have an option. So if a bakery sets up a separate bakery outlet and says, I'm selling only bakery products from here, and let's assume they sell, let's say it's a Theobroma, right, for the reason for a name. So let's say they are a Theobroma, which is into high-end pastries and other stuff. If they set up, their business model is going to be very similar to an ice cream parlor. Now the question would be, Theobroma would say that, look, I am a restaurant. They would say, I am a restaurant, similar to an ice cream parlor saying, I am a restaurant. An ice cream parlor is in no way a shop that people go to buy a product just like that. They actually go, buy an ice cream and consume that ice cream there, right?
Sir, in the explanatory notes, they spoke about the concept of since no cooking takes place.
Correct.
So a lot of these bakeries, they are actually baking the cake right there.
Absolutely.
Like if you walk into a cakes today,
Right.
the outlets all across the city, they are actually making the breads right there. On that logic, can they presume that they are restaurants and go ahead and charge 5%?
Very much, very much. So if they are doing it right there, if they are baking it right there and doing everything there, which I don't know to what extent that is feasible, because the process of the bakery business involves...
So it can be like a mixed model. A lot of items could be being sourced from their central kitchen, but at the same time, they are cooking many things there. Like
So then they have to keep them segregated. What is being cooked
So,
there?
but it's not really practically possible, because in all fairness, they would like to go in for the 5% model.
Yes,
considering
similar
that
to the ice cream parlors also, who want to go for 5%.
Right.
Okay, now in case of ice cream parlors, for example, there is no concept of cooking at all over there. You can't cook an ice cream.
But you do make waffles and lot of chocolate sauces, etc. at the parlor. So
No,
that's...
that is an add-on. That is an add-on to the ice cream.
No,
So-
sir, but when we sell an ice cream in a waffle cone, because it's a case study I'm working on, and if I get your views, I mean, it's in all fairness to the ice cream parlors, say for instance, whose ITC is not very high, they would obviously want to go in for the 5% model. So when you take a scoop of ice cream on a waffle cone, they charge you as a unit, say X amount of rupees for the ice cream and say 15 rupees for the waffle. So out there, they would either be charging 18 on both the products together or 5 on both. So my question is, what as per you would be the right rate, considering
No.
the waffle is made there?
See, there is no question of the right rate. The way I look at it is, as of now, what GST Council says is paramount. And GST Council in its wisdom says that an ice cream parlor is not similar to a restaurant, and it is similar to a trading outlet. So that is why, if you remember, I had one slide which said there is a manufacturer of ice cream and there is an ice cream parlor. Now that same ice cream gets embedded in a meal. So there are quite a few places in lot of cities, I'm sure in Kolkata as well, where you have an ice cream outlet on the ground floor. That's an ice cream parlor. First floor is a restaurant. And you get the same ice cream in that restaurant as part of your overall meal, and that overall meal is getting charged at 5%. Now that meal includes the value of the ice cream. So what I am trying to explain is, if you try to apply logic to GST law, not only ice cream, many other things won't make sense at all. It just doesn't make sense. Right?
So
And that is
as-
the reason why I said, why should a McDonald's, Pizza Hut franchisee be denied ITC? Just because they are charging 5%. Should they not be given an option of 12? They should. But today, do they have a choice? They don't have a choice. Now, you will remember, since you said you are doing a project on this, you will remember in the initial period of GST, I think 2018, there was an advance ruling of a restaurant in Delhi. And that shop had a sweet shop on the ground floor and a restaurant on the first floor. And the question was, the gulab jamun that I sell from ground floor and first floor, should it attract different rates of GST? And the AR said, yes, you should charge different rates of GST. They said, in the order, and they said, what you sell from ground floor, you should charge 5%. What you sell from first floor, you should charge 12%. And then somebody asked them a question by saying, then if the first floor supplies, ground floor supplies to the first floor, what should I charge? No, there's no logic. So my request is, till the law gets amended, don't apply logic to GST, because it won't make sense. It is illogical.
Thank you, sir.
Okay? Thank you, everyone. Any thoughts? Okay. Thank you.
Thank you, sir. We would be happy to present you a memento on behalf of the Bengal Chamber. Our next speaker, Mr. Puloksha, is on the way, so he will be here in 5-10 minutes. So we request you to please wait for sir. Tea break at 4 o'clock, so he is not ready yet. Just. He is on the way, actually. Yeah. এটা বন্ধ করে দাও তো, এটা চালিয়ে দাও। এটা বন্ধ করে আরেকটা যে প্রেজেন্টেশন এরপরে কোডটা চলবে বলে দিচ্ছি। একটু লক্ষ্য রেডি করে রাখলাম। I now request Mr. Pulok Shah, the co-chairperson of the Indirect Taxes Committee of Bengal Chamber and also the partner Tax and Regulatory Services from PwC, to take the next session on educational sectors and charitable trusts.
Good afternoon. Sorry to keep you waiting. I got stuck up. Today, the topic which has been given to me is GST on charitable trust and on educational institution, or in the more particularly into the educational sector. When the GST came, I recall that there were a lot of confusion about the applicability of GST on various activities being carried out by charitable institutions, charitable trust, various activities being carried out by the educational sector, and the various services being received by the educational sectors, because there are specific definition into the what is called charitable activities. When it is an educational sector, there is that the exemption notification deals with certain criterias. Regarding that pre-education, I mean that educational institution has been defined up to higher secondary level examination, and after that there are other examination, and then again there is a degree which has been conferred under the law, etc. A lot of these things actually created a lot of problem. People have gone into advanced ruling authority for getting the ruling, and most of the cases what has happened, the advanced ruling authorities have given the right direction, And one of the cases where there has been some amount of confusion which has come up, but subsequently things got resolved. And why this educational sector and the charitable trust, the importance they have gained into the GST, because nowadays a majority of the CSR activities are being carried through the charitable trust, and those charitable trusts belong to that particular group. Like if it is a promoter-driven company, in more particularly in eastern parts of the country or even other western parts of the country, and they have all the families, all the business families, promoters, they have their education, they have their various trusts, and all these trusts are being funded by these companies, and this expenditure are being claimed as that CSR expenditure. Now, when this money is being received by these educational institutions or the charitable trust, whether it is taxable or not, that was the issue. So now I've tried to take you through a couple of items through which you would be able to know First, I'll take you through the educational institution, right? You know that the educational institution, there are 6 headings, service headings have been created under GST. 99921, pre-primary education services. Pre-primary education services. Then 922, primary education services. 923, secondary education services. 924, higher education services. 925, specialized education services. 929, other education and training services. And educational support services. So these are the basically 6 chapter headings under which various educational services or services provided by educational institution or received by educational institution are being taxed. Now there are certain specific exemptions like IIM, right? Now the question came up whether the services provided by various IIMs as per the guidelines of the central government, through that services, it's a basically 2-year full-time postgraduate programs, whether it would be considered to be taxable or not. By exemption notification, it has been made exempt. Fellow program in management is exempt. 5 years integrated program in management, it is exempt. That means all these cases, because in this case what is happening, that a special kind of degree and is being conferred under the central government's guidelines, etc. And for that matter, this kind of things, when the IIMs are receiving the fees from their students, it is not liable to GST. Now there are certain specified activities which have been made exempt for the educational institution. Now, educational institution, any service which has been provided by an educational institution to its students, faculty and staff, which should be made an exempt. Now, what is called educational institution? See, even a proclaimed educational institution cannot be considered to be an educational institution and would automatically be entitled to get this exemption benefit, because educational institution has been specifically defined in the exemption notification. Educational institution What is educational institution? That the institution which is providing services by way of preschool education and education up to higher secondary school or equivalent. That means preschool education, education up to higher secondary school or equivalent. That means when you admit your children to a kindergarten school, this is preschool education, and up to higher secondary, that means up to class 12 exam, whatever the fees being charged by that educational institution will be exempt. Education as a part of a curriculum for obtaining qualification recognized by any law for the time being in force, right? Like CA Institute, Costing Institute, or Company Secretary Institute. What they are providing in education, that is also exempt. Education which is a part of the approved vocational education course, which would be, these are the educational institution. Now, it is also mentioned that what is called educational institution, what is called vocational institution. See, a registered trust, you know that a registered trust acting as an educational institution would be eligible for this exemption even if the same is not covered under the definition of the charitable activities. Now the coming that, you know that I will take you through the charitable activities, why this has been mentioned, because sometimes what happens, we see that educational institution is forming a charitable trust and they provide these educational activities. Now charitable trust, their income is exempt if that particular income is used for the purpose of specified defined charitable activities, wherein this educational part is not there, since it is specific exemption has been given under entry number 66 of the exemption notification. So it will be, in addition to that, it will be available an exemption. But the same educational institution, suppose an educational institution, when it is providing any other services, suppose an educational institution is allowing a bank to put up an ATM in their campus, and for which they are getting some amount of rent, that is not exempt, that is taxable. There are other exemptions also, that educational institutions which have been defined to be an educational institutions, when they are providing any services by way of transportation to its students, faculty and staff, and any fees being charged by that educational institution will not be liable to GST. In catering, including and midday meal, that in this case what happened, that transportation, generally what happened, these transportation services, it is being provided, or any catering services, any midday meal services which is being provided, or any security and cleaning services, housekeeping services being provided by various service provider. And any service which has been in this kind of services provided by any service provider to the educational institution will also not be liable to tax, and the educational institution is not liable to pay tax, and they are also, the service provider is also not liable to pay tax and charge tax. Now, again, when we were going through the definition of the educational institution, that educational institution, there are two kinds of educational institution. Basically, that educational institution which is providing preschool education and up to higher secondary education. There are other also, like various different law colleges and etc., which is also providing an education. And when they are charging any fees from the students, it is not liable to pay tax because the degree is recognized. Even if they fall under the definition of the educational institution, these institutions are not entitled to get the exemption from GST while receiving the services under transportation to staff and faculty, catering, any security cleaning, etc., etc., any security admission, etc. Like just for example, that when say CA Institute is or IIM, they are arranging that admission and they are getting it done by a third party admission process and etc. Though it is in relation to admission, it is not a preschool education or higher secondary education. It, the IIM or ICAI, they are liable to pay tax while procuring the services. Now recently in one of the appellate authority in advanced ruling, in Logic Management Training Institute, what has happened, they filed an application before the advanced ruling authority in Kerala, wherein they said that that particular institute was to be providing teaching to the aspirants for the chartered accountancy, cost accountancy, etc., etc. Now they said that we are also providing tuition to the people who are actually going to qualify as a chartered accountant or cost accountant or a company secretary, as the case may be. Now whether we are liable to pay tax or not. Now the advanced ruling authority held that this is nothing but a training which has been provided in a private coaching system, which is not covered under the definition of the educational institution, right? And they had gone into the appellate authority, and appellate authority also upheld that this is taxable. Now, what is called education, which is part of an approved vocational education course. Now, what is approved vocational education course? An approved vocational education course means a course which is run by an industrial training institute or an industrial training center affiliated to the National Council for Vocational Training or State Council for Vocational Training, offering courses in designated trades notified under the Apprentice Act 1961, or a modular employable skill courses approved by the National Council of Vocational Training run by person registered with the Director General of Training, Ministry of Skill Development and Enterprises. That means anybody cannot claim to be that I am a vocational institution and I am providing a vocational courses, and through these vocational courses, the person who is attending that course, he would be entitled to join in a company and he is getting some required skill to join in an organization. Now what is this? That in this case, that the approved vocational education course has to fulfill the definition as defined under the GST Act, and wherein that approval is required, affiliation is required from the National Council and Vocational Training. It's from the state and central government, as the case may be. So without this, any proclaimed vocational education institute cannot claim that their fees charged by them from their students are exempt. Now there are also into this, in educational institution, what we have seen, there are a couple of that misunderstanding of the people, whether it is a composite supply, whether it is a mixed supply, and if it is a composite supply, then how it would be taxed. If it is a mixed supply, then how it would be taxed. Now, you know that what we have seen, that sometimes what happen, there are various kind of, in case of a boarding school. In case of a boarding school, the school is charging a fixed fee without demarking, without a demarcation, how much is for the purpose of meal, how much is for the purpose of stay, and how much is for the purpose of education. It is a composite supply. And the primary supply in this case is the education, and since the primary supply is the education service which is exempt, so that particular fee will not be liable to tax. Now sometimes what happen, there is a dual degree, dual qualification what we have seen. Some of the organizations, some of the institutions are providing dual degree. Now one of the degree is recognized, another degree is not recognized, right? If it is recognized, then it is not liable to tax. If it is not recognized, then it is liable to tax. Then what happen, when there is a bundle, when there is a bundle service of taxable and non-taxable for a single fee, it would be considered to be a mixed supply. Once it is a mixed supply, then as per the rate mixed supply, the tax would be at the highest rate. That means that the exemption which has been otherwise available to the recognized degree, that will be denied because it would be considered to be a mixed supply. Sometimes what happens, that what we have seen, that the various courses, auxiliary courses provided by hobby, extracurricular activities, etc., you know that in some of the cases in boarding school, if there are certain things that because of the capability, the horse riding, you can opt for it, you may not opt for it. Swimming, you may opt for it, you may not opt for it. For gym activities, you may opt for it. If you opt for it, you have to pay for this. This is a hobby classes, an extracurricular activity that is incidental. And if it is an incidental, then it would be considered to be a composite supply. Then it will not be liable to tax. But suppose it is also a question that whether the IIM, when they are charging, IIM, IIT, or even our Institute of Chartered Accountants of India, they are inviting various participants of companies for the campus interview and etc., and they are charging some money for that from the participating companies. Whether it would be liable to tax or not, yes, it would be liable to pay tax. So from an educational perspective, if anybody has any question, I can take up, or then I will go to the straightway to the charitable trust.
Above 11 and 12 college. So if someone is providing a service to such an institution, then the entire gamut gets taxable, since they don't fall within the ambit of educational institutes.
Because you know that when we are talking about the St. Xavier's, they have if they have demarcated, I don't know what is the structure. If it is demarcated up to class 12, beyond that, then the demarcated portion, if anybody provides any service to that demarcated portion, then it is not liable to pay tax. The person who is providing service, he is not going to charge, and Xavier's is also not liable to pay tax. But if it is not demarcated, then there is a challenge. If it is a single unit, then there is a challenge. And for the sake of convenience, they have to demarcate, and they have to do some things, some books of accounts and records and etc., identification of particular area, that this is the area which is being used for the purpose of that up to class 12. This portion we use for the purpose of beyond class 12.
Because the revenues of the view, since the entire institution falls outside the ambit of the definition, so whatever service you provide, say for example, if someone is providing security services, which otherwise is exempt, then the entire gamut of services becomes taxable, because Xavier's, say for example, is no longer an education institute because it's beyond the definition you just discussed.
That means Xavier's, now the Xavier's has become an university.
Right, exactly.
Even that St. Xavier's Collegiate School, that is also falling under the university, or collegiate school remains a school.
No. So it's one unit now. So it's beyond that primary and that education.
I doubt.
So that's why.
Then I doubt. If they cannot demarcate that school portion and the whole total institution as a whole is an university, and that particular university provides preschool, post-school education, I mean that secondary, higher secondary, and beyond the education, in that case, I'm afraid. The first thing is that charitable trust, when this charitable trust we were discussing during GST, when it came up, the first thing is that whether the charitable trust would be considered to be a person or not. That is the first thing came up in the mind of the people. And when we were reading the definition of the person under the GST, we see that the charitable trust, which is a legal person, a charitable trust is created by virtue of certain legal provisions. And the charitable trust, once it is created, it gets a legal entity. And once it is a legal person, which is included into the definition of a person. The moment you are falling under the definition of a person, then automatically you are liable to pay tax if you fulfill the various other conditions and etc. Like whether the question comes in that whether registration is required or not. It is once you are falling under the definition of a person, automatically all the responsibilities, duties, rights, everything would be entitled. That means even that trust is also entitled to enjoy the threshold limit of 20 lakhs of rupees in normal states and 10 lakhs of rupees in specified states, right? Now, unless until certain services, certain supplies are exempted, anything other than that, trust is liable to pay tax, right? And that is why what happens for individual trust, what we have seen for a large houses in Calcutta, we have seen that different trust which was created long back 50 years ago, 80 years ago, we have seen that the trust when it was created that time they never thought of it that the GST or something this kind of animal would be coming in due course and that will change the whole game. Because in my subsequent slide I will show you that the concept of trust in those days basically from an income tax perspective. They never thought of it from an indirect tax perspective. So every income tax angle has been taken care of while drafting the trust deed, right? Now the time has come, you have to design your trust deed in such a way and your object clause, why the trust has been created, the object clause of that particular trust, object of creation of that trust is to be worked out. So each and every trust has a different model and each and every model to be reviewed for the purpose of taxability of the particular trust. Now under GST, there is a specific general exemption to a charitable trust. There are main two important conditions to be fulfilled. The first one, that the charitable trust and that entity more precisely must be registered under section 12AA of the Income Tax Act 1961. If you are not registered under section 12AA of the Income Tax Act 1961, you are not entitled to get any exemption benefit. Then second part, the services provided by the entity must be a charitable activity as defined under the GST Act. So, even now, both the conditions are to be fulfilled. Both the conditions are to be fulfilled to get an exemption under the GST by a charitable trust. First, you have to get yourself registered under the Income Tax Act, under section 12AA, and the service which is being provided must be a charitable activity as defined under the GST Act. And what is these charitable activities? Which is completely different than what we know from an income tax perspective. And when we see the charitable activity in my subsequent slide, I'll show you that what is the difference between Income Tax Act charitable activity and the GST Act charitable activity. That actually created confusion when GST came in. All right, what is this charitable activity? There is a specific charitable activity, public health. You see that only the following activities are to be considered as charitable activities. Number one, public health, by way of care, counseling of terminally ill persons or persons with severe physical or mental disability, persons afflicted with HIV or AIDS, persons addicted to or dependence forming substance such as narcotics, drugs or alcohol. Public awareness of preventive health, family planning or prevention of HIV infection. Advancement of religion, spirituality or yoga. Advancement of educational program of skill development relating to abandoned, orphaned or homeless children, physically or mentally abused and traumatized person, prisoners, persons over the age of 65 years residing in rural areas, preservation and conservation including watershed, forest and wildlife. These are the specific one by one item you have to analyze whether are you doing any one of these. If you don't do, you are not going to get any exemption. You can only get the exemption up to that 20 lakhs of rupees. And when there is a 20 lakhs, again that threshold limit calculation, you have to see that 20 lakhs means it is not your taxable 20 lakhs, exempted, and all turnover put together it is to be 20 lakhs. So one need to be very careful about the trust. I'm sure that a lot of trust would be facing the departmental audit in due course once the audit will start. Because most of the cases people are actually not following this very religiously and line by line. These are the specified items for which you can only claim to be you are performing charitable activity, otherwise not. Now, charitable purpose under the Income Tax Act, when we read, we see that section 2515 of the Income Tax Act, charitable purpose includes, this is an inclusive definition, relief of poor, education, yoga, medical relief, preservation of environment including watershed, forest and wildlife, preservation of monuments or places or objects of artistic or historic interest, and the advancement of any other objects of general public utility. See, the general public utility, you see the most of the cases when we are going back to the charitable activities defined under the GST Act, and you see all these are advancement of any other object of the general public. It's not a specific public, it's a general public. Now, a question came up whether when the charitable trust, when they are importing certain items, when they are importing certain services, whether the charitable trust is liable to pay tax under reverse charge or not. Again, there is an exemption wherein it is stated that any charitable trust registered under Section 12AA of the Income Tax Act is not required to pay tax under reverse charge. Right? Now, any trust again any trust which is not registered under 12AA, any trust, it is a trust but not registered under 12AA, because to become eligible for registration under 12AA, you have to have certain conditions to be fulfilled, because if I create a trust, my family trust, for personal benefit of my children, my family members, etc., I cannot get myself registered under section 12AA, but I am a trust. So if I import something, any services, I am not exempted to make the payment of GST, but that is what it is stated. Yes, yes, because even a private, because private trust is also a trust, but a private trust cannot be registered under section 12AA. No, reverse, I mean that when you are importing some services, when you are importing certain services, you have to pay IGST in a normal scenario. If you are a registered trust under Income Tax Act section 12AA, then you are not required to make the payment of IGST when you are importing any service from abroad. But if you are a private trust, you are importing the similar services, you are liable to pay tax under G. Now a trust, sure. In for service there is no customs duty. Yeah. That if a particular charitable trust or charitable and religious trust, it conducts any religious ceremony. That means a trust is holding, say, Durga Puja. Trust is holding a Kali Puja, right? And they are collecting donation in public at large, right? And through that money they are organizing this religious ceremony. It is the money which is being collected from various persons will not be liable to GST. Even a person who performs it, that means the Purohit, right? The person who performs that religious ceremony, if he charges anything, of course a Purohit, he charges something for the purpose of doing the performance, so that is also not liable to GST, right? Now, it is very clear that the trust, when it is performing any religious ceremony, that is exempt. But in the performance of that religious ceremony, all the income receipts are not exempt. Suppose for the purpose of this performance of this religious ceremony, they are taking advertisement for putting up the hoarding, right? Suppose they are taking advertisement from the advertisers, they will pay you some money and they would be putting up the hoarding. So benefit is passed on. That means I am allowing you to put on the hoardings into the area of my religious function. That is, in turn, I am providing advertising services. So the money which is being collected, that is liable to GST. No. Yeah. No, sorry. Because they are collecting, na? Trust would be liable to pay tax. Now, that is why you might have seen that when GST came, there was a huge confusion amongst the big Durga Puja committees in Calcutta. There were a lot of notices issued to the various Durga Puja committee for the advertisement money they have collected, and they were asking for the information how much money you have collected for advertisement, right? So that those clubs and organizers are liable to pay tax. And that is why the club is liable to pay tax. No, reverse charge is a sponsorship. Reverse charge, that is a different game. This is a sponsorship. No one. And that is why they have already started facing the music. Yeah. All would be picked up. Already they have started issuing the notices to the various large clubs. Now, if a particular religious or charitable trust is renting the precincts of its place for general public, then it is exempted. But this exemption would not be applicable, right, if that particular trust renting room whose charges are more than 1,000 rupees per night, renting of a community hall, banquet, etc., if the charges are 10,000 rupees or more per day, renting of shop for business, commerce, etc., for commercial activities, if the rent is 10,000 rupees per month. So, all the rents by a religious and charitable trust is not exempt. Only if the precinct of that particular religious place has been given on rent for the purpose of general public. Precinct has been defined under the law, religious place has been defined under the law. What is general public, what is public at large, that is also defined under the law. Other than these, all are taxable. And what are the conditions? Even if your room rent is less than 1,000 rupees, you have a general exemption for under renting category, for hotel accommodation, etc. Right? And for this kind of trust, if your rate is 10,000 less for your banquet hall, it is not taxable. For shop, 10,000 rupees per month, it is not taxable. Other than that, it is taxable. If a religious person providing training and coaching for recreational activities like art and culture, sports, a charitable entity which is registered under Section 12AA of the Income Tax Act. Section 12AA Income Tax Act has a tremendous importance in this case for determination of taxability of a particular trust, right? And one important thing is that when it is a training for the purpose of art and culture, you are not required to obtain registration, because for training, coaching, art and culture, it is individual 1:1, right? Suppose a dance trainer, when she gives or he gives training, or he runs or she runs a school, dance school or a singing school, that is actually coaching for art and culture, for which he or she is not required to get registered under 12AA of the Income Tax Act, but the exemptions would be available, because it's a general exemption coming under these recreational activities, right? Training, art and culture relating to, that means it's a training or coaching on art and culture, right? However, for the sports activity, it is required. Section 12A registration is important. Now, charitable trust, they are also running various public libraries. Now, whether that public libraries, in this case, they are getting some money, some subscription, whether it would be liable to pay tax or not, no, it is exempt. Charitable trust, which is arranging yoga and medication camp, right? So, whether that the minimum charges which is being charged by for organizing that yoga and meditation camp, because this is for the purpose of public at large. It is fulfilling the public at large, and that is why it is exempted, right? Now, charitable trust, when it is supplying goods, there is a huge confusion in the charitable trust. Most of the cases, what we have seen, that the charitable trust registered under section 12AA runs a hospital, and in that hospital, because hospital healthcare service is exempted, so they are not worried. Now, in that particular hospital, there is a medicine shop, and that medicine shop is being owned by that particular trust. And they are claiming that we are not making any profit. We are giving this medicine to the poor. We are supplying this medicine without any profit, cost to cost basis we are providing. There is no commercial activity, there is no profit element, profit motive, etc., etc., etc. But the various advanced ruling authority rightly held that the definition of supply is very wide into the GST Act, which is an inclusive definition. And because of this inclusive definition, any supply, whether it is for the purpose of profit or not, it would be considered to be a supply. Once it is a supply, it is liable to pay GST unless it is specifically exempted under any notification. So, the supply of goods by a charitable trust, whatever may be the form, it will be liable to GST. Sorry? No, if it is then to charitable activities, And you know that some of the time, sometimes what happen, what we have seen that various charitable organizations, because one need to understand under the GST where the catch is. As I was showing you, there is a big difference between the definition prescribed under the Income Tax Act and the GST Act. When the trust was created long ago, that time there was no GST, no tax, indirect tax on the trust. Everybody kept in mind the GST, from the income tax perspective, and the income tax, and accordingly the object has been created, and they were performing the objects of that particular for which that trust was created. Now the law has been amended. Now the new law came in, which encroached into the trust transaction. Once they encroached into the trust transaction, now people got puzzled. They are saying by income tax, we are not paying any income tax, why we will pay GST? We are providing charitable activities. The department is saying, yes, you are providing charitable activities, but that activities is not covered within the definition as prescribed in the GST law. So you are liable to it is a supply. Once it is a supply, you are liable to pay tax under the respective head, because there is no specific exemption. So these are the very, very important thing. And most of the cases, you know, that we have seen for the various trusts, you know, that sometimes what happens that one need to be very, very careful. Why? Because we have seen cases where that CSR fund has been given to the trust with a directives. You have to do this, you have to do this. The moment any directives is attached with the donation, then you are under obligation. Once you are under obligation, then what happens? Once you are under obligation, that means a consideration is flowing. Because I am getting the money against a consideration, I would be following the instruction given by the donor. So that is why there should not be anything in writing, any instruction while giving that. It's a blanket, right? It's a blanket, and the fund which has been given by that company for any CSR activity, and while performing that CSR activity by the trust should ensure that they are within the definition, the activities are within the definition of the charitable activities as defined under the GST Act. Now charitable trust, when they are running an hospital, because you know that hospital healthcare service is already exempted. I am not taking much into this issue because we all are aware that the healthcare services is already exempt. So a trust, whether a private trust or a trust registered under section 12AA, or a trust, even that healthcare service is not falling under specific definition of the charitable activities, still it is exempt. Because healthcare services has been specifically exempt by a different entry in the exemption notification, right? And now I would like to give you some couple of examples. You'd be finding that there are, when a trust is constructing one mandir is being constructed and people are giving money, right? I give 10,000 rupees without any condition, they issue a receipt, I walk out. That 10,000 rupees is not taxable. The moment somebody gives 10 lakhs of rupees with a mention that my father's name would be that one marble slab would be put in memoriam of my father's name and my mother's name, something like that, that would be pasted. That money is liable to GST. So the same, when I am making the payment, my mind is I am giving the donation for ultimate objective is to fund for construction of the mandir, everybody's. But I am not putting any condition, other donor is putting a condition. The moment a condition is attached, then the trust is obliged. Any obligation attached to any donation, in that case, it will not be considered to be a charitable activities. And the moment you deny the definition of the charitable and you are not falling within the definition of the charitable activities, then what happened? Then you would be denied the exemption. With this, if you have any question, I'll take 2 or 3 questions because I'm just within the time. Any charitable, because I'm telling you that trust is very, very critical. If anybody has any question, I can, with my limited knowledge, I can share with some of the ideas, otherwise I'll close.
Hello, yeah. So I have a question. Suppose, as you told that regarding that CSR activity, suppose a company has donated to its own trust, that is run by the promoters, the trustees are the same and the directors are the same. And they are giving a particular amount as a CSR to that particular trust for a certain objective. So whether any utilization certificate from the trust need to be given back to the board, or can board give any instruction which might be considered as an obligation for that particular CSR?
No, it's not that. You know that what happened for that CSR activity, it is governed by the Companies Act, right? You have to fulfill some of the conditions of the Companies Act, wherein you have been mandated to spend a percentage of the profit for the purpose of CSR activities. Now, what are the kind of CSR activities that is also prescribed, right? Now, if you know that this is the organization, it does this. You are not giving any instruction, but you know that this organization, what they perform, that fulfills my obligation towards CSR expenditure. First, I as a donor, I must ensure, because CSR activity is also a mandate under the law. Once it is a mandate under the law, I must first fulfill, while giving fund to the trust, whether trust actually fulfills that conditions or not. Assuming the trust fulfills, hopefully the trust fulfills. Now the question comes in, if the trust belong to your group as well, then the question comes. When you are giving the money and the trust belong to your group, now the question comes whether the trust, whether you are actually siphoning the money or you are actually funding the trust, right?
Right.
So there lies the problem. Then it is the onus is on you that you demonstrate the money which has been given. I have not given any instruction. I can ask for the utilization, that for what purpose, whether the purpose for which, because the trust will demonstrate to the donor, we do this, we do that, etc., which is, if you donate us, we will give you a certificate and you can produce that certificate and we are a recognized trust, and donation to us would be considered to be a CSR activity, right? And once these are the linkage, if you can meet this link, then you are free from both the angles, as a donor from the Companies Act perspective, as a recipient trust from a GST perspective.
Thank you.
Thank you very much for your patient hearing.
Thank you, sir. We would like to present a memento to Mr. Shah on behalf of the Bengal Chamber. I now invite Ms. Shivani Shah from Shivani Shah and Associates to take the next session on e-commerce. This is our last session and Ms. Shah is here also, so I request her to take it forward.
Very good evening to all the participants. A very warm welcome to Pulakda as well. It was a very thrilling session. You just had 1 hour. I had a lot of questions, but we'll reserve that for the next time around. Well, I've been given the onerous task of speaking the last and the least experienced of the August battery of speakers we had, and indeed the last session. So we'll try and make this interactive. It's a short and sweet session. So while he just runs the presentation on the laptop, my session for today is on e-commerce, as the topic says. Any thoughts when we talk about e-commerce? Any literal meaning of what really it implies? Anyone here? Okay. Sale of some goods or services. So we'll stick to the definition of supply. Let's omit sale for once. So supply, as we all know under GST, ever since the inception of the GST law under Section 7, the definitions of sale, manufacturing, etc. are all obsolete. Although we saw in Mr. Mani's presentation how the council is still laying a lot of emphasis on the concept of manufacture. Any of you can recollect when did we speak about manufacturing? While he was presenting, we spoke about the concept of manufacturing of ice creams. So if you're not really manufacturing anything, they said that it would not be considered as a supply of service. Nonetheless, as of now, let's stick to the concepts of supply. So yes, very rightly mentioned, the e-commerce, as the very name suggests, means electronic commerce, wherein we are supplying either goods or services over our platform or maybe through another platform. Say for example, if any one of y'all, have y'all ever shopped on Amazon? Yes or no? We'll try and make this interactive. My cup of coffee, if someone can just get me here, and maybe a quick round of coffee for everyone, so that at the end of this session, all of us are a little more knowledgeable on the subject. Believe me, even I was making this presentation as recent as today morning, because this is a subject I'd not worked on. So this side of the dais, maybe I'm not any more intelligent on the subject as any one of you here. So we'll try and make this interactive. So any one of you all have shopped on Amazon? Yes? Flipkart? And how many of y'all have Swiggy installed on their phones? Huh? Practically all, right? Anyone who does not have? Yeah, so we always have an exception in Pulakda. So yes, so we are all, when we talk about the world of Amazons and Flipkarts and Byju's and Hotstar and Hotstar, right? Netflix. These are all types of e-commerce platforms, right? That means we are, as consumers, engaging in receiving a certain supply of goods and or services over an electronic platform. So this was obviously just a very small literal idea, but if we go to the law, so the GST law, as we all know, this has many definitions of many concepts. Since my topic is e-commerce, let's quickly run through the definition. E-commerce under section 244 of the CGST Act means a supply of goods or services or both, including digital products, over digital or electronic network. Now, I've written versus OIDAR services. Any idea what are OIDAR services? See, when I ask you a question, you're all supposed to look at me. I mean, I'm considering I'm not that bad to look at. So when we are on the slide, look there, but when we are interactive, you look at me, right? So OIDAR, any idea? What does it stand for? Online Information Database Access Retrieval Services. Now, any idea what is OIDAR? Any example? But even online, Amazon is online. You can't access Amazon without being online.
Any online documents we are reading.
Okay.
So online, using online and suffering in
okay,
surfing internet,
yes, in a way,
that is.
yes. Any other ideas? See, when we talk about e-commerce, as the definition means, it's a supply of goods and services or both. When I talk about goods, Amazon, Flipkart. When we talk about services, could be any idea, services online? Shadi.com, okay. Maybe Urban Clap, है ना? You just have to hang a photo frame, just tick, 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 Urban Clap, and the guy is sent. Uber, Ola, right? Now, these versus, say for example, something like a Netflix or a Amazon Prime, right? So while in the former, there is a two-way interaction, right? You have to pay Amazon, you have to receive the goods or services. If very briefly, if I could say OIDAR services are a one-way interaction. So everything is obviously online, digital, and there is a one-way communication. This it's a very bird's eye view. I'm not getting into it because that's not our subject for today. But this is the distinction. Say for example, Ghana.com or retrieving certain data online. Those are all falling within the ambit of OIDAR services. But right now we are concentrating on the e-commerce services or e-commerce. And what is an e-commerce operator? 245. It says any person who owns, operates, manages digital or electronic facility or platform for e-commerce. So can you give me an example of an ECO, e-commerce operator? Any example? Very good, Make My Trip. Anyone else? Sorry? Acha. Amazon, these are all ECOs, right? So say for example, I have a gamut of services or goods to offer, and I take the services of Mr. X or X Limited, that I use your platform to supply my goods or services. So who becomes the ECO? Who becomes the ECO in my example? X Limited. So ECOs, for the sake of brevity, let us understand them as managers. So basically, whenever we talk about an e-commerce transaction, there will be, in an ordinary situation, 3 parties. So say for example, I came to BCC&I, and honestly, while I was sipping the water from that table, I really like those plastic covers. And I thought once I get back home, I'm going to order a bunch of that for my office. So I place an order on Amazon and those are delivered to me by, say for example, ABC company in Ludhiana, or could be in Bengal, or could be XYZ place. So how many parties are there in this transaction? 3 parties. And can we have the listing of the 3 parties? One becomes the supplier. In my example, the party in Ludhiana who's supplying these covers. One becomes me, who's the ultimate recipient of the goods. And the third becomes the platform of Amazon, who is my manager, which platform I use to to receive goods. And in other words, the supplier is using to supply the goods. Clear until now? Great. Sorry? Courier agency. See, essentially yes, but the courier agency has a tie-up with the Amazon. So I don't care whether the courier service is provided to me by X courier, Y courier, Z courier. But when I'm actually buying the product, I'm aware of who's selling me the product. I have a choice that whether I need to buy it from this person or that person. So in an ordinary sense, for the essential gamut of the transaction, we have 3 parties. You also may have a 5th party, literally speaking, the guy who opens the gate and receives the parcel, someone who packs. So without getting into that, essentially we have 3 parties in the e-commerce transaction. So moving ahead, the types of e-commerce, I beg your pardon, I think it's not very visible. I'll just read that. So I'm not getting into the traditional model. Let's get into the types of model you see today. So you have a marketplace, you have service aggregators, you have something called the m-commerce. Again, when we talk about the people who are involved in the transaction, you could have a business to business, you could have a government to business, you could have a consumer to consumer. So let's just briefly discuss the examples of each type of the last segment of the slide, which is say for example, business to business. Can you give me an example of a transaction on e-commerce B2B? Come on, you need to put your thinking hats on. The torture is going to last only for another half an hour, so we'll try and make the most of each other's company. But on a serious note, I hope I'm making sense to all of you. Yes? Now to make me realize that I'm making sense, you need to interact with me, please. Is that a thumbs up? Yes or no? Yes. So let's discuss an example of B2B. So today when I place an order or an order on Amazon, say for example my mother likes to buy something and she goes and she just places a random order through her mobile number. Will she be eligible for the input tax credit of that item? Assuming it's something that is not blocked otherwise under 17. No, why? Because she's not registered. But say for example, I see that I have a series of purchases to make and they are pretty much for my business use. And you know how chartered accountants are, even if it's not, we make it fall within the ambit of the unblocked credit. So then if I need to avail the credit, what do? I open a business account with Amazon. So that becomes business to business, right? So when you get the invoice, you are eligible to take the credit and you actually see that in the 2A or 2B, the ITC is actually flowing in, right? One example of government to business, e-commerce. IRCTC, okay, that could be one. Supply of services, which is transport. Tea, for any one of you who are aware of how tea has been traditionally sold, it's been sold on auction. So actually our tea board had organized this way back, much before this concept was brought into GST. So they have the auction system wherein the tea board now actually deducts the TCS, the payment which is made by the buyer to the seller. So that becomes government to business. C2C, consumer to consumer. My laptop has become old and I decide to buy myself a new laptop and I put it up on sale on OLX, right? Consumer to consumer, right? So there are different models. We'll very briefly touch upon all the models or as much as we can till 5:15. Okay, so let's go to the next one, which is the marketplace order. So obviously we've discussed the concept of Amazon, Myntra, Flipkart. All of these are the marketplace order, wherein essentially we have three parties, which is the consumer, the supplier, and the ECO. ECO is actually called the marketplace. Now, so obviously when I place an order, Amazon is the one I am interacting with, but the order fulfillment is done by the supplier. In my example, the plastic cover manufacturer from Ludhiana. Am I correct? And out here, whenever any one of you have a business account on Amazon, right, so if you can share with us, if you've ever seen an invoice which is generated, B2B, the invoice is generated by Amazon or is it generated by the original supplier? Exactly. So when the original supplier is actually sending the product to madam, that supplier will charge GST as a normal supply, right? And so what is the income that Amazon is earning? Amazon is earning its commission from the seller. So that is how it operates. So this is just a small bird's eye view of how the marketplace order takes place. Now coming to the other models, you have the inventory model, you also have hypermarket models, you also have aggregator models. Now inventory model is, so whenever, unlike now, when you log on to an e-commerce platform like Amazon, you also have something called the Amazon Basics, right? The amount I'm speaking about Amazon, it appears like all the time I'm on Amazon, right? But it's the little research I did so that we could have a good discussion today. So when you see on Amazon, it's only now they have something called Amazon Basics. And don't click pictures. I'm sure Sharbani will share the PPT with all of you. So what happens is they are not keeping the inventory with them. They just place the order with the supplier, and as I said in the prior slide, the order fulfillment is done by the supplier. But Alibaba in China, they actually buy everything, they keep it as their inventory, and then they sell it under their name, as if it's Alibaba who's selling it. So that is also one model which I don't see happening very much in India. Again, inventory model, it's only now, yes, that Amazon has started. Say for example, the other day I was buying batteries, so they had an option of Amazon batteries. So that is something which Amazon is now recently getting into. As I said, Amazon Basics also. Again, what is the hyper market model? That's a model wherein you undercut your price to the extent that you can eliminate all competition. And between GST, between a supplier and a recipient, we all know vis-a-vis section 15 of the GST Act, the transaction value will be the assessable value provided you satisfy two conditions. Now, can any one of you give me any one condition? Say, for example, I'm interacting with Sir, and he really likes my deliberation today, and he gets in touch with me and says, Madam, I want a legal opinion. To which I say, it's okay, since you were the participant here, I will give you a legal opinion at 30,000, which otherwise I charge 50. Can the department come and question why have I charged him 30 vis-a-vis Madam, to whom I may have raised a bill of 50 for the same type of opinion? Any idea? Can the department come and challenge my valuation? No. So in order to sustain the valuation, what are the two twin conditions I need to satisfy under section 15, 1(5)? It is? Arm's length price. No, I'm giving the opinion to her for 50 and the same opinion I'm charging him 30. The only reason could be I like his face, but that's a very rare possibility. Under 15, the idea is that if me, that is the supplier, and the recipient are unrelated and price is the sole consideration, then the transaction value is the assessable value and the department cannot question that. Just I digressed a little because we were talking about the hypermarket model. So the hypermarket model allows you to bring down your price to the extent wherein you can eliminate all competition. Clear? Then comes the aggregator model. Aggregator model means like the Olas and the Ubers. So what is the difference between Amazon and Ola Uber? Any idea? So while we were discussing Amazon, Madam just said that when I have an invoice of a product which I placed an order for on Amazon and I am registered as a GST vendor recipient, the invoice is provided to me by the original supplier. Clear? But when you sit on an Ola or an Uber, do you know who does the car belong to? You obviously are given the credentials of the driver. That is for your safety. But otherwise, do you really know if that car belongs to X, or does it belong to the driver, or does it belong to Ola? No. So what are aggregator models? Aggregator models like Ola and Uber, where they are providing the services under their brand name. And you are not aware of the fact as to who's providing that service. Clear? So that falls within the ambit of the aggregator models. So until now, we've just discussed what could be the various varieties of e-commerce operators or e-commerce transactions. And now let's shift focus to the other part of the discussion, which is the liability to pay tax. So the charging section 9(5) of the CGST Act, read with notification 17/2017. Obviously, you can draw a parallel of this charging section to section 5, subsection 5 of the IGST Act also. Now, what does it read? The government may, on recommendation of the council, by notification specify categories of services, the tax on intrastate supplies of which shall be paid by the ECO if such services are supplied through it, and all the provisions of the Act shall apply to the ECO as if he is the supplier liable to pay the tax in relation to the supply of such services. Provided, we'll come to that part later. Let's first stick to the first part of the definition. So we just discussed in a regular e-commerce transaction, there could be three parties. Mr. X, who's supplying the goods from Ludhiana, Shivani Shah, which is in Calcutta and is taking the goods, and Amazon, which is the ECO. Now, we also discussed the various formats you could have in an e-commerce transaction under GST. Right now, we're discussing that who would be liable to pay the tax. Is it Amazon? Is it the party in Ludhiana? Is it me? Now, obviously, ultimate burden, because it's an indirect tax, has to be borne by the recipient. But now we are discussing that in between the ECO and the supplier, who would be liable to make the payment of tax, right? So, under 9(5), what they have done is, they have deemed that the e-commerce operator or the ECO will be the deemed supplier. So, for the purposes of 9(5), they talk about certain services. Mind you, in the first part of the definition, if you see, the first part of the section, it talks about services only. So by the notification 17/2017, as amended as recent as last year, effective from the 1st of January this year, which Mr. Mani was also speaking about. So for these 5 or 4 services, they say, the liability to pay will be on the ECO. We don't care who's providing the services. Subject to certain conditions, the liability to pay tax as per the charging section 9 of the CGST Act or 5 of the IGST Act, we deem you, that is the ECO, to be the supplier, and you are the one who will discharge the GST for us, as I said, subject to certain conditions. Clear? We will obviously discuss what are these services. So in these transactions, the e-commerce operator and the supplier are one party. So the minute these two become one party, you have just another party, which is the receiver. So only 2 parties for the perspective of payment of GST. Am I clear? Yes or no? Would you like me to repeat? No, don't ask me questions, because right now I just need to first, abhi tak maine jo bola, is it clear? I'll just come back to you, sir, in a minute. So यहाँ पर हम बोल रहे हैं that whenever you have an ECO and the supplier, एक party, and the receiver is the other. Why? Because the ECO is deemed to be the supplier. Clear? Now, you've heard about TCS under e-commerce? Yes or no? Under section 52. So here they say, in this case, there will be no TCS. Obviously, TCS, I will not cut my own TCS, right? So likewise, if there are two parties who are deemed to be one, because now the supplier has no identity, as for these limited services, it is the ECO who's liable to pay tax, and on my own supply, I will not be required to pay TCS. So on these transactions, TCS under 52 does not apply. Next, the question may arise that if this is the ECO and I am liable to pay taxes, it is but obvious I will show all these in my returns as my supply. Are we clear on this? And as I said that there were only a limited few services under this notification, but with effect from the 1st of January 22, the council has added another service within the basket of 9(5), which we will be discussing right now. And since ECO becomes the person liable to pay the tax, all the provisions of the GST Act, which otherwise apply to a supplier, would apply to the ECO. Now, what are the transactions which are covered under 9(5) and 5(5)? So, transport of passengers by radio cab, motor cab, maxi cab, etc., etc. The supplier can be anyone. The tax has to be discharged by Uber. So, say for example, my office is in New Aleppo. I came down here. I used the services of an Uber. So, firstly, I am not aware, it's an aggregator model. I don't know whether the driver is some Ram Yadav or Ghanshyam or some one else. I know for me the ECO was my supplier. So likewise in this case, the government also says that you are the one who is required to pay the tax. We are not concerned whether the person who owns the car or the driver, whoever he or she may be. Clear? The next one, providing ACO accommodation in hotels, inns, guest houses, clubs, campsite. Example, makemytrip.com. Someone just shared an example. Here they say the person of supplier is any person except who is liable to take registration under section 22(1) of the CGST Act. In other words, say for example, now that we are seeing the end of the pandemic, I'm sure a lot of us are wanting to travel. So say for example, I want to book myself and my family a holiday. I log into makemytrip.com and I want to say for example, go to say for example, a place in Delhi. So I book a hotel and that hotel is not liable to GST under section 22 of the GST Act. Why? Because it's under the threshold. So if it's under the threshold, that means 20 lakhs, 10 lakhs, as the case may be, they are not required. Then in this transaction, MMT, Make My Trip, will be liable to pay the tax. On the contrary, if it is a person who otherwise is liable to pay tax under section 22, then MMT need not pay the tax. The government says we will take the tax from them. Again, services of a housekeeper, plumbing, fixing your furniture, etc. Example, urban clap. Again, if the services are provided by a person who otherwise is liable to pay tax by getting registered under the provisions of 22 of the CGST Act, government says let him or her pay, otherwise you pay. So like Mr. Mani was discussing, the last slide is that. What does it read? Supply of restaurant services other than services supplied by restaurant, eating joints located at specified premises. Specified premises, again, notification 17/2021, that if any restaurant is at a place where the declared tariff is 7,500 above, then it is a specified premises, then that particular restaurant will be liable to pay tax. I will not be liable. I as in the ECO, that is in Swiggy or Zomato. But if it is a small restaurant which otherwise is not liable to pay tax, then the government says we don't want to lose this chunk of tax, Swiggy, you pay for me, for them. So exactly the thread of the conversation I borrow from your session with Mr. Mani, where he said that the unintended or the intended outcome of this change was what? That if today I go to a Momo house to eat a Momo, you know, then it may not be taxable to GST because their turnovers are less than 20 lakhs, or at least officially it's less than 20 lakhs. We all know, with all of us having Swiggy and Zomato, I really feel that there'll hardly be any eating joint whose turnover is less than the threshold. So, having said that, if you order the same momos on Swiggy, will Swiggy charge you the GST on behalf of the restaurant? Yes or no? Yes or no? Exactly. And why do they have to charge? Because this guy, otherwise the supplier is not liable to charge. So the government says, sorry boss, I'm not losing that revenue. Now you are operating as an ECO, you are the manager, you might as well also pay the tax to us. So if you actually go on Swiggy, there is something they charge as a delivery tax. Then there is something called taxes and charges. Under taxes, again, they'll have two taxes. One they say is the restaurant tax. That will be a 5% on the gross value, which is the food charge plus the delivery charge. And then something else they charge you also. So the next time you want to ride your wives, I just see one lady in the audience except me, for a Momo, make sure that you walk it down or drive down rather than ordering it on Zomato, right? So, that is it as far as this is concerned. And obviously, borrowing the same thought, we spoke about circular number 164. And what does this circular say? The circular says that, well, for an ice cream parlor, we will not consider it as a restaurant. क्यों नहीं करेंगे? Very simple, because आप कुछ cook नहीं कर रहे हो. To my mind, it is a circular which is a hopeless circular, because see, as a service provider, I would love to pay 18% and take my credit. And of the minute you block the credit, you know that 5% is actually not making any difference to me, because there is a big chunk of GST I am paying on manpower supply services. There is a big chunk of GST I pay on my rentals. There may be a chunk of services like security which attract GST, housekeeping services. So what am I going to do with all this GST? You are not allowing me the credit. It's going to all add to the tax. So now you need to do a cost benefit analysis whether this 13% is more or less than this ITC which has otherwise accumulated. So in ice cream services, they say, bhai, you are not a restaurant because you are not doing anything. You are simply selling an ice cream. Obviously, there is a very big question mark that whether they actually cook, because if you walk into an ice cream parlor, as I mentioned, you know, there are many waffle cones which are made at the parlor. Many times the ice cream parlors have a back kitchen where they're actually making the ice cream there. So in the EN to the restaurant services, they use the concept of cooking. In other words, they want to imply if there is no cooking, you can't call it a restaurant service. So why am I discussing this in terms of ECOs, e-commerce operators? If Swiggy today picks up an ice cream for me from Baskin Robbins, will it term it as a restaurant service, or will it otherwise term it as a 18%? Because you see, in my last slide, what did we discuss? That supply of restaurant services by restaurants. So if it's not a restaurant, that means 9(5) will not apply. If 9(5) will not apply, the ECO is not liable to pay tax. If the ECO is not liable to pay tax, the tax has to be borne by the supplier, and the provisions of 52 will come into place. So hence, obviously, there is a small, not a small, I would say a big doubt here. But as chartered accountants, as practitioners of law, we all love playing the devil's advocate. So that brings out the best in all of us. But yes, this certainly is an area which requires more consideration from the council. But having said that, if it's a restaurant from which it's picking up food and supplying it, and otherwise ECOs are liable to pay tax, so obviously what is the tax you pay on restaurant service? Have you all ever seen the tax you pay on the restaurant bill? It's how much? 5%. And even as you were discussing, you are not entitled to any ITC against that. So as a Swiggy or as a Zomato, if I deliver some food from a restaurant to my customer and this restaurant is not liable to pay GST, who becomes liable to pay GST? Me. I am Zomato, right? What will be the tax I'll pay? 5. And do I need to comply with the conditions of non-availment of ITC? Yes. And what happens to the bunch of my common ITC? Because we all know under Rule 42, 43 of the CGST rules, if you are providing any exempt supply, and for the purposes of notification 11/2017 that prescribes the rates of GST, any subsidized rate of tax which is provided with a condition of non-availment of services, for the purposes of reversal, it is treated as an exempt supply. That means you will not get any ITC, and the common ITC, say for example, telephone, the bike rents, etc., will all go in the pool of the common ITC, and you have to follow the reversal as per Rule 42 or 43, as the case may be. Unless you can determine that, say for example, I have 100 motorbikes, these 2 motorbikes I will use for the exempt supplies, that is for restaurants which are otherwise exempt, and this I will use for the TCS, it doesn't happen like that. So obviously to that extent it will create some confusion there. So that is the common ITC reversal that will be brought into place. So before we move on to the other part, sir, you had a question? Clarified, right. So synopsis, well, if we talk about this, you have the e-commerce portal. Now, maybe Shivanish and Associates, as a chartered accountant, I have my own portal, right? So you can log on to my website, book a consultancy, book a legal opinion. So that is one format, but obviously out there will be no implication of TCS because I am not hiring an ECO. I am my own ECO, right? So that is one format. The other one is where the supplies of goods and services are taking place through an ECO. Like we've discussed, Amazon, Ola, Uber, Urban Clap, blah, blah, blah. Now again, when we talk about the second limb, you can have services and goods, right? Goods, Amazon, services, food, Urban Clap, etc. When we talk about services, again 2 parts. What are the 2 parts? If you are falling under 9(5), ECO is the deemed supplier, no TCS, ECO pays tax. And other than these services, we come to the second slide. And in goods, it is always a TCS based model where the ECO has to take a registration. There are various conditions for TCS which we'll discuss. So is this clear until now? So there is, forget about when we are supplying through our own portal because that is not within the ambit. But if I'm using a portal, again it can be 2. I can be a supplier of goods or services. So I'm the supplier, I use Amazon and I'm providing a good. TCS provisions will come into play, which will be taken care of by Amazon. But if I am a supplier of service and I'm using the services of a ECO, if my services fall under the ones notified under 9(5), then I am not responsible for payment subject to the conditions of threshold and ECO will do all the compliance. But for the other services, I take you here. If the other services are, if it is above the threshold, that means I am providing the services of makeup and beauty parlor and my services cross 20 lakhs. Then what happens? TCS will apply, which will be taken care of by the ECO, which is my e-commerce platform. Example in services could be Urban Clap, right? And if I am a supplier whose turnover is less than 20 lakhs, notification, 20 lakhs or 10 lakhs for some states in the Northeast, then no TCS will apply. Now, if you go to section 24 of the GST Act, there they talk about compulsory registration. And there you see for 2 categories of people, inter alia, that means amongst the others, they say that if you are an ECO, you need to register, or if you are a supplier of services or goods, you need to mandatorily register. There is a notification 65/17 which says that even though you are supplying a service, even though you are supplying through an e-commerce platform, if you are below the threshold, you need not register. Clear? So for services, if it's above the threshold, TCS, so we are done with 9(5) now. Now we are gradually moving to the TCS provisions. So if it's above the threshold, TCS applies, and if it's below the threshold, then TCS will not apply. And it overrides provisions of 24, wherein it says that you need to mandatorily register notification 65 in case of e-commerce platform services says that if you're a service provider whose otherwise turnover is less than the threshold, you need not mandatorily take registration under GST. Now, this brings me to the next slide of registration. So 24, we have discussed compulsory registration, quite a few other categories of suppliers who need to mandatorily get registered. Example, if I'm a chartered accountant and I have a turnover of 10 lakhs, do I need to get registered under GST? Not from the perspective of e-commerce, I'm asking you regular. If I'm a regular supplier, do I need to get registered? No. But if I have a client in Maharashtra who wants to take a service, still do I need to get registered? Yes. For interstate supply, yes. So there are a couple of services, not getting into it, but just to give you a brief of what the section reads. Now, notwithstanding anything in 22(1), mandatory registration is required for persons who are required to pay tax under 9(5). That is, we just discussed, and person who supplies goods or services other than 9(5) who's required to collect TCS, and ECO he is required to collect TCS. Now a question arises that where will the ECO take registration? So Amazon has, say for example, an office in Gurgaon, but the buyer is in Bengal and the seller is in Maharashtra. Will it need to take registration? The law says from wherever it provides the service, the ECO will need to mandatorily take registration. And it may happen that they do not have an office, so there the provisions are provided in the registration that you can still take the registration, and every office, of the revenue also, they have an administrative officer who takes charge of such cases. So, for all sake of brevity, when you go for ECOs, if I recollect correctly, it's Rule 12A, that they need to mandatorily take registration in all these states where they are providing the service, irrespective of the fact whether they have a physical presence or not. In fact, let me take you back to that slide in the second part. See, the proviso reads that where an ECO does not have a physical presence in the taxable territory, any person representing the ECO for any purpose in the taxable territory shall be liable to pay tax. Provided further, where an ECO does not have a physical presence in the taxable territory and he does not have a representative, such ECO shall appoint a person. So that means you cannot escape the registration and you need to mandatorily take the registration. In fact, every supplier also, in the offline utility, whenever you are applying for registration as a supplier, and if you're supplying through an ECO, you get a checkbox, which is not available in the online utility. But when you download the offline utility, there's a checkbox which is available, which you tick that if you are a supplier supplying services through a e-commerce operator. So reference of section 24, ECOs are required to get registered, and any person required to collect TCS must submit an application in GST REG 07. You are granted registration. These are all procedural matters, and once you feel it's no longer required, you can remove that registration by applying for cancellation. So basically, an ECO will require two registration. One will be for the purposes of TCS, and one will be for the purposes of commission. As we discussed that Amazon is also earning some money out of commission, that is the supplier is giving them. So one registration will be for that, and one registration will be for the purposes of the TCS. And in every state from where it operates, it needs to take the registration, and also the supplier will need to take the registration. This is a flow chart. This is again very procedural. I don't see much I need to discuss here. Moving ahead, TCS. So TCS is again section 52(1) of the Act. ECO is required to collect 0.5 CGST, 0.5 SGST on the net value of supplies made through it. And wherever the consideration is actually collected by the ECO, the provisions of TCS will apply. So whenever TCS is deducted, for the supplier, it appears in their cash ledger. And there will be no provisions of any TCS if the supplier is unregistered. And you all know that how your credit gets auto-populated in the e-credit ledger, TCS comes in the e-cash ledger. So hence, it will never appear in your GSTR 2B, and you have to manually fill it in your 3B. And also, if you are a assessee who falls within the ambit of a supplier who's supplying through ECO, or maybe you're a consultant to them, don't just accept everything that comes your way, you know, in your TCS. You have to understand, make a monthly reconciliation of the supplies you have made, and then accept the TCS in your ledger. So what are the important conditions? You have to be involved in the supply of goods or service electronically. There has to be an intermediary. ECO should be responsible for collecting the payment. The supplies must be taxable. So if I'm actually buying some rice or some food items which otherwise are exempt, although I buy it on Amazon, GST will not apply. Composition suppliers who otherwise opt for composition scheme cannot opt to supply through an ECO. And say, for example, I am a lawyer and I want to supply some services from e-commerce portal, then TCS will not apply, because lawyers otherwise under section 9(3) of the CGST Act, read with notification 13, 2017 CTR, fall within the ambit of RCM. So there will be no TCS in case of RCM transactions. Very brief, we just have another 2 slides left and then we are done. So we spoke about the TCS is required to be paid on the net value. So I am a supplier who supplied lot of goods through Amazon, but my customers returned it in the next tax period. So then TCS will required to be paid only on the net value. So here they say the net value of supply means the aggregate value of goods or services other than 9(5) made during a month by all registered persons, reduced by the amount which is returned. So a quick example, say for example, ABC is the ECO, the total intrastate supplies made is 3755. The intrastate supplies under 9(5), which don't attract TCS, is 55, less the goods which were returned in the month, that is 6,20,000. So the net value on which I pay TCS at the rate of 1%, which is 0.5 and 0.5, will be 1% of 2585. Now here, remind yourself always that this reconciliation is not month-wise, but you have to make it supplier-wise. You can't deduct the supply of A from B. So in some cases, like in this, it may happen that in some cases, say for example, you supplied through your platform by a supplier A. The supply was 10 in a given month and the return was 12. So the figure becomes negative, so no TCS. You can't carry forward the negative. But in the same month, supplier B supplied through your platform 50 and returned 5. So it was 45. So you pay TCS on 45. You can't adjust the -2 of A with B. But you only pay TCS on 45 in case of B, and you ignore the 2. Neither can you carry forward the -2 for the next month for Mr. B. So you have to actually ignore the negative values. You have to calculate your TCS GST wise. You have to actually do it on the basis of what you collect. So in this case, you see, I have written on the top that this is for the month of October 20. So TCS will need to be collected and reported in the month of October, although you may have received the money in the month of November. Then what are the few other issues? ECO should make the collection in the month in which consideration amount is collected. Okay. Amount collected to be paid within 10 days of the following month. TCS collected by the operator will reflect in GSTR 2. The GSTR 8 has to be filed within 10 days of the following month. And lastly, as I said, that it will not appear in your e-credit ledger, but your cash ledger. And e-invoicing, now the threshold, as we all know, for e-invoicing is 50 crores. So in order to see whether e-invoicing will apply, the threshold limit will be seen of the actual supplier and not of the ECO. But who can issue the e-invoicing, both have an option. The Amazon as well as, say for example, which means the ECO and the supplier and any supplier who sells the goods through an ECO and has a turnover in excess of 50 crores, either one of them can issue the IRN. I think with this, I would like to end my deliberations. Thank you all so much for bearing me, the fag end of the day. So have a good weekend ahead. Thank you so much.
Now, we would like to present you a memento on behalf of the Bengal Chamber. Thank you all the delegates for joining us today. And this is the first workshop we had done after the 2 years, means a physical program. We are doing online, and we are trying to come back to the physical format again, like earlier days. So thank you once again for all your support, and we hope to continue this earlier model and this physical mode in the coming days. Thank you. The tea coffee is also outside. You can have some refreshments.